That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Welcome back to Bloomberg Markets Europe. We still have 10 minutes to go until the start of trading here in Europe. Global giants of the telecoms industry are gathering in Barcelona for the Mobile World Congress. Let's get out there now to Tom McKenzie, who's on the ground for us. Tom.
Anna, good morning. Yes, very pleased to say I'm joined by the CEO now of the BT Consumer Group. So think EE, PlusNet, BT. Mark Lehrer, good morning. Thank you for joining us at the Mobile World Congress. And you really are a very good touch point in terms of the health of the UK consumer at a time, of course, when we're concerned about recession. The Bank of England thinks we're going to be in a recession this year. What is your sense of the resilience or the fragility of the UK consumer? Are you seeing people cutting back, subscriptions being cut, negotiations over contracts?
Yeah, I guess with 25 million consumers on our customer base, we're a really good barometer across the UK. And I think the key is that consumers aren't one homogenous group. We've got different segments of consumers across all parts of the UK using products and services in different ways. But there's no doubt we do see pockets of behaviour change. We've seen for many years now consumers holding on to devices for longer, and we're certainly seeing that trend continuing. We're seeing more demand for recycled devices, so the ability for consumers to get access to the latest piece of technology by saving more. We've had to be more flexible and change our packages to put more value for money in for the more cost-conscious consumer. But we're also seeing at the high end very little change in demand as well. So it's very much a case of a segmented consumer, and some of those consumers not really feeling the pinch, but those that are, we're doing everything we can to respond to their needs.
Okay, so it's a segmented picture. You and others are going to be raising prices by about 15% come April. How do you think that's going to play out for the consumer?
Yeah, this is obviously got a lot of focus at the moment, and we have to remember that inflation has been really low for the last few years, and the inflation-linked pricing mechanic's been in the market for 10 years now, and it's getting loads of attention now, almost like it's a new thing, but it's a 10-year-old mechanic. And of course, the last few years, inflation has been close to zero, and so the cost that we've passed through for consumers has been close to zero because our costs haven't been increasing significantly. But unfortunately, this year, like all businesses in all sectors, I'm sure with you talking to so many people across so many different industries, our costs are going up significantly, and the costs that we consume aren't the average CPI basket. I mean, they're the more expensive ones, like energy, for example, where we consume a huge amount, components and chips and semiconductors and all of the components that power all of our networks and consumer kit. All of that's actually going up significantly greater than the rate of inflation. So unfortunately this year we do need to pass those through.
Are you worried it's going to lead to cord cutting though?
Well, I think this is an essential service, and we are providing faster speeds and greater reliability and greater coverage of fibre and 5G in more places than ever before. And the proportion of telecommunication spend for a UK household has actually declined significantly over the last few years. So as a part of an overall household's basket spend, we're right down in the bottom quartile, actually, providing much better value for money, I would argue, than any other sector. So I don't think it's going to have a huge impact on churn. It will, of course, increase its prices for consumers, but only by around £1 a week. And relative to food and energy and electricity and petrol and everything else that consumers are consuming, I don't think that's going to be a huge increase, really.
It's a big day around Brexit, the Northern Ireland Protocol. The government seems to have got a deal. We have a little more clarity in terms of the economic damage of Brexit across the UK economy. Do you have clarity? Do you have a sense of the impact it's had across your business and across UK consumers?
I think impact of Brexit is not one for me to talk in any detail. I'm sure you'll have lots of people who are got a load more economic data than me to speculate on that. But there's no doubt, I think, being able to plan over the longer term, having more confidence in the longer term for an industry like ours that makes investments over 15, 20-year payback periods is going to be a very healthy thing. So anything that helps that environment is going to be seen as positive for us.
Okay, Mark Alera, we've run out of time. It's really sad. We want to talk about the rebranding of the sports proposal, TNT Sports, EE, consolidation in that market. We'll catch up with you another time. Mark Alera, the CEO of the consumer division within BT, so heading a portfolio including the likes of EE, PlusNet and BT. Thank you very much indeed. Back to you, Anna.
Thanks very much, Tom McKenzie there at the Mobile World Congress, joining us with the latest on that particular sector. Futures here in Europe, then, Mark, pointing a little higher. US futures jumping a little towards the start of the trading day. I guess we don't read too much into this, given Friday's trade.
Yeah, but it is interesting, the resilience. Since the show has started, things have traded a little bit more positive. It is very good so far that we've not seen negative follow-through from Friday's data and price action.
Okay, we'll keep an eye on that then. Thanks to Mark for spending the past hour with us. The Open is up next, as we've been saying. Futures point a little bit higher then for European stocks and for US stocks. We will leave you with the European market open next. This is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. What's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, probably I try and play that role.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning, everyone, and welcome to European Market Open. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London, and here are your top stories. Rishi Sunak and Ursula von der Leyen meet today in the UK on the cusp of an agreement on Northern Ireland, but the Prime Minister still faces obstacles in selling any deal. Asian stocks slide after heavy selling on Wall Street on Friday as traders scale up rate bets following hot inflation data. Plus, the Chief Executive Officer of Vitol, Russell Hardy, joins me on set live later this hour as London Energy Week kicks off. Don't miss that exclusive conversation. Now, let's take a look at the futures. And again, it's all about what happened, of course, in the U.S. on Friday, and a lot of that is filtering through some of the Asian markets. Now, investor concern over risky assets is probably the story of today. We're seeing that Euro Stoxx 50 futures holding on to some gains, 0.3% higher, but really it's all about that PCE, that preferred data that the Fed is looking at that came in quite hot for the month of January. It did prompt a swift repricing of interest rate forecast. Traders now pricing U.S. rates to actually peak at 5.4% this year. Now that means there's going to be many pitfalls across global assets. I'm looking at commodity prices as we also get into a week where the cap on Russian oil is something we'll look at because of London Energy Week. So equity futures are now opening. So the FTSE gaining some 0.4%. The IBEX also gaining 0.5%. We did see quite a lot of volatility overnight in Asia. Here in the UK, the big story, of course, is Brexit and this possible new agreement. Now, the thinking is that if Rishi Sunak has said that he would speak to the press after meeting Ursula von der Leyen, we could have some kind of agreement. The difficulty was then him selling it to his own MPs. British pound 119.61, so watch out for any move in terms of sterling. Euro against the dollar 105.52 for euro dollar. Right, on to some of the other cross assets that we're watching out for. The US 10-year yield 392.58, and then of course if you look at the 10-year yield, pretty much a little changed. This is after a jump of a 7 basis point height on Friday, and then we're looking at sterling. We could also be looking at yen strengthening slightly for the yen, and you can see sterling 119.63. So let's get over to our markets reporter, Valerie Teitel. And Valerie, you're looking today at U.S. equities.
Yes, Francine, the momentum in U.S. equities has really taken a turn. The S&P index is now retraced 5% since those February highs, nearly cutting those January gains in half as it confronts its 200-day moving average. This has all happened with the backdrop of U.S. yields moving higher. Those two-year yields have now moved 65 basis points higher over the month of February. But look, it's perhaps a good thing they hit new highs in the Asia session overnight, but risk assets today are looking kind of positive. So maybe this move has stalled for now and equities can breathe a sigh of relief.
Thank you so much, Valerie. Valerie Teitel, there, our markets reporter. Now, EU Commission President Ursula von der Leyen is on her way to the UK to meet Prime Minister Rishi Sunak to finalize a deal on a post-Brexit settlement for Northern Ireland. Well, speaking to Bloomberg earlier, the UK Shadow Chancellor of the Exchequer, Rachel Reeves, said Labour will support the government on a Brexit deal.
We hope that the deal improves upon the Northern Ireland Protocol. And we've been very clear. Labour are the party of the Good Friday Agreement secured 25 years ago. We'll do nothing to put that in jeopardy. We're not going to play party politics with this.
Now, for more on all of this, we're joined by Bloomberg's UK correspondent, Lizzie Burden. Christina Kino from our Markets Live team also joins us. So, Lizzie, let's start with you. Talk us through the choreography of today.
Well, Francine, it's set to be a big day here in Westminster. Von der Leyen set to meet Sunak late lunchtime around in Berkshire, which of course is the county home to the Royal Castle of Windsor. Not clear yet whether she's going to meet the King. Reports of that over the weekend, criticism that it was dragging the royal family into politics. But after that meeting between the two leaders, there's going to be a cabinet meeting at which the Prime Minister, the Foreign Secretary and the Secretary of State for Northern Ireland will brief ministers on any deal if they can reach one. Then there'll be a joint press conference between von der Leyen and Sunak, and then Sunak will head to the Commons to give a statement to MPs. Now, we're not expecting to have a vote on this today, but when it comes, it's expected to be a three-line whip, so it'll be something like a referendum on Rishi Sunak.
So can Sunak actually win the support of the Unionists and the Brexiteers in his party, Lizzie?
Well, they have been what scuppered the plans so far. He's been on the charm offensive over the weekend to try to get them on board. There have been hardline DUP MPs saying that they're not going to sign up to anything that keeps anything of the Northern Ireland Protocol. But there is a range of views within the DUP, it has to be said. The other worry, though, is that someone like Steve Baker, the Northern Ireland minister, could resign. He's reported to have been frozen out of the talks so far, but he was photographed giving a thumbs up to the cameras when he came out of Downing Street over the weekend, so he's a question mark. The other potential worry for Rishi Sunak is the former Prime Minister Boris Johnson. He's been defending the Northern Ireland Protocol Bill, which of course would allow the Prime Minister to unilaterally override parts of the Protocol Bill. So the disruption within the Conservative Party could yet continue, but as you heard there from Rachel Reeves, Labour says it will offer the government the votes to get a deal over the line.
Lizzie, thanks so much. Lizzie Burden there, of course, outside Westminster for us. Christine, when you look at the kind of risks, so we thought it'd be risk-off mood overall because of what happened overnight in Asia, but actually we're seeing gains across the board. European stocks getting 1% overall. I mean, this has nothing to do with Brexit. It's more, I guess, the general mood on inflation in the U.S.
Absolutely, Francine. And I think, yeah, it's very interesting, as you mentioned, because markets seem to have wrapped their heads around the fact that the Fed's going to have to do more to tackle inflation, and they've repriced that accordingly. I noted that you mentioned earlier market pricing for that peak in the Fed rate is at 5.4%. That's even above what we're seeing from the most hawkish of Fed officials. That's James Bullard, who still puts his own forecast just below that, 5.375%. And so before, when we saw kind of the initial hawkish notes coming from the Fed, I think markets were quite spooked by that. But I think now investors have had more of a chance to kind of really wrap their heads around the idea that inflation is here to stay. They're going to have to price in higher rates accordingly, but not panic about it.
Okay, how do they look at Brexit? I don't know whether there'll be market moves on the back of a new Northern Ireland Protocol.
I mean, yeah, you know, I mean, Brexit has been something that markets have been living with for quite some time. It's not particularly kind of at the front of mind for investors. At the very least, I would expect if we do see a deal either today or this week, that it would put a bit of a floor under sterling assets. They have been challenged recently because of the global sort of risk-off sentiment that we've been seeing of late. And so some good news on the domestic front at least kind of gives UK markets a bit of a more solid footing heading into this week.
Christine, we also have, once again, Christine Lagarde saying, look, 50 basis points is on the table for March. What would not make them do 50 basis points?
Well, I think any kind of surprise prints in terms of the euro area economy, either in terms of consumer confidence or business sentiment, which have been holding up quite well recently, or perhaps any kind of surprise on the inflation front, kind of a pullback. But that's quite unlikely because we did see core inflation hitting quite the highs from data last week. And so this is why we're hearing more hawkish notes from the ECB. So barring any sort of quick and immediate downturn on the consumer business sentiment front, I think 50 is quite nailed on for the ECB, at least for March.
Yeah, and we have quite a lot of data actually for the rest of the week. Is there anything particular that you're watching out for? I know we also have China manufacturing, PMI, non-manufacturing. Then we have U.S. construction spending on Wednesday.
Yeah, I mean, I think the China story is going to be quite interesting. I think we're going to be heading for quite a key period in China as well, where we're going to be hearing in a couple of weeks, I think, from the government in terms of their economic outlook for the year. And so that's going to be quite interesting. Again, we're all looking at how that China reopening story is playing out. That's actually provided quite a bit of fillip for a lot of the companies that we've seen more recently reporting in earnings, pinning their hopes on that China demand story reviving, particularly in the European space. And so that's going to be quite interesting to watch. Is that recovery really going along as well as we could hope for out of the COVID-0 era?
Christine, thank you so much. Christina Aquino there with the very latest on the markets. Now let's get to our stocks on the move. Joe Easton from our equities team joins us. Joe, what do you have and how much will UK or the new Brexit deal move UK stocks?
That's right, Franz. That's a big question this morning, and I thought I'd bring up some of the companies that are most exposed to the UK economy. So we're starting looking in the retail space with Next, which is really the middle income area of the market. It doesn't have that protection from the low-end, cheaper discount sector or the luxury sector, so it's heavily dependent on the British economy. That stock edging a little bit higher today, and we're seeing that trend across the broader retail and domestic market as well. The other one in the banking sector there is Lloyds. 100% of their sales come from the UK. So we're looking at the kind of consumer business in terms of credit cards and also potentially lending among companies, which was really badly hit by Brexit, given the supply chain snags and that kind of issue. That actually stemmed some lending to the corporate space here in Britain. That one edging up slightly in the context of the broader European market, obviously moving higher today as well. The final one I wanted to put in was JD Wetherspoon. Tim Martin famously backed Brexit and then later complained that they couldn't get enough EU migrants to pour pints in their pubs. So I thought I'd put that one in there. That one was up 1% in early trading, trimming some of those gains at the moment. But I think we do see a bit of a marginal boost across the domestic UK stock space if this deal comes through today, Fran.
All right, Joe, thank you so much, as always, for a terrific roundup of some of the UK stocks. Also, we match. Look at that. We have actually probably the same suit on. Coming up, inflation tops concerns at the G20 summit. We'll discuss how markets are poised to continue pricing further rate hikes. This is Bloomberg.
Out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
The top names at the Fed are on Bloomberg.
Inflation's normalizing, but it's coming down slowly. I just think there's going to be a lot more inertia, a lot more persistence to inflation than maybe we'd all want. I'm hearing people still out there pushing price and trying to test where the levels of inelasticity really are. As the meetings go on this year, we'll see what happens. If inflation settles, maybe we don't go quite as far. But if inflation persists, maybe we'll have to do more.
Nobody covers the Fed like Bloomberg, your global business authority. Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
We have to win the fight against inflation, because if you look at where we are in terms of growth, we are not in a great place.
We are mostly considering second round effects, how long and how high the U.S. policy rate will go up, how the China's reopening will affect our economy as well as exchange rate.
Most of the source of inflation is actually on the non-demand side.
Energy prices, shipping costs, labour shortages. Well, I think inflation will be higher than we'd like for longer than we'd like.
IMF Managing Director Kristalina Georgieva and other central bank heads speaking on the fight against inflation from the G20 meeting in India last week. Now joining us is head of EMEA Equity Capital Markets at UBS, Gareth McCartney. Gareth, as always, thank you so much for coming in. There's a number of things actually that we need to look at when you look at the strength or not of equities overall in Europe. But year to date, they're around 10% higher. What's the main driver for some of these equities?
I think the fundamental driver is positioning. We came into this year with significant concern
returns on the investor side. They were underweight the market as a whole, and it only took some marginal gains in the China reopening story, slightly better macro data on inflation, and then we've seen this squeeze higher, which, as I say, has been really investors forced to buy into a price action, but really lacking conviction yet.
What needs to happen for them to actually have a lot more conviction? So I know we look at inflation and interest rates and the path forward for the Fed.
If we look backwards, really, for me, central bank liquidity and very low interest rates for a long period of time was really the big pillar of the bull market that we saw. So the key question for investors to answer now is, where is the terminal rate of interest rates going to be in the US? And that really allows them to price equities.
I'm surprised with all of the leverage in the markets, all of the leverage in a lot of these balance sheets, that actually, companies seem fine when they're reporting earnings.
Yeah. I think there's a benefit of inflation with earnings being in nominal terms, so I think that's been supportive, but there's no doubt the market's been positively surprised with earnings. For me, the fundamental question is, if you look at companies, we've had a repricing, generational repricing of interest rates higher, yet we've not really seen any addressing of their balance sheet through raising equity, with the odd exception in the real estate sector.
So what does that mean, a correction on the way, or how long can this continue?
Yeah. I think really the positive sign would be when you talk to CEOs, CFOs, they're not yet seeing any distress coming through. And I think the reality is corporate balance sheets are actually in pretty good health in general, and therefore it's not like a post-COVID period where they're forced to come and raise equity.
So the consumer is also holding strong. Is that post-COVID, that people continue spending because they haven't spent for the next 2 years? Like, are all the models a bit muddled?
I think we're still working our way through a lot of exceptionals. We've had significant geopolitical uncertainty. We've got China reopening, which is a big story. I was in Asia last week, and there's definitely a lot of optimism on that side of things. And then we're seeing this unwind of low interest rates. So I still think in terms of, for investors, there's still a lot of working through some of these exceptionals.
So how do you describe if you look at the exceptionals and if you look at the way forward in terms of balance sheet, but still, I guess, the fear that we're missing something?
Yes.
Are companies ready to list, come back on?
Yeah, I think, look, the IPO market is a significant question. We're having really two big discussion points. I think one is with private equity companies. They have actually raised a lot of money. They've done a lot of monetization during 2021. So my suspicion is really that market won't really open properly until 2024. So I think 2023 will be a story of gradual reopening in the second half of this year of the IPO market, but we're not really back to fundamentally normal until 2024.
Because they want to see how it pans out. So it's a bit of a wait-and-see situation.
Exactly. I think there's some very good quality large assets which investors are looking for. There's a massive scarcity of supply. When we talk to investors, they are desperate to see more companies come because they're sitting on lots of cash. They want to put money into the market. But I think everyone's waiting and seeing, and we need to see a few significant IPOs happen for them to perform well to really bring the rest of the supply forward.
Because, again, the biggest question, I guess, is how does inflation, do in the U.S.? We're talking a lot about Fed interest rates, but we don't really have a good reading on what inflation does in 2 months, 3 months, let alone 8 months.
Absolutely. Look, the precondition for a healthy IPO market is a low volatility. So if we look at the VIX, it was really at 30 and beyond for the majority of last year, and it was no surprise to see an IPO market that was fundamentally closed. The excitement you're seeing with ECM bankers at the moment is we've had the VIX back towards 20, but it goes back to that fundamental lack of conviction in the market that we're seeing from investors, and therefore markets are still very skittish. So we're seeing block trades happen, which is tactical overnight, but for more strategic decisions like an IPO, that's still on hold for now.
Does the new Brexit deal bring back IPOs to the UK market that could have left elsewhere?
Yeah. Look, I think I would put a positive outcome on this new Brexit deal in the marginal gains category. I think it's a helpful data point to resolve one of the issues, but it's not going to fundamentally be a catalyst for more issuance, in my view.
How much has London lost in the last couple of years?
I think there's a lot of discussion around this topic. I would say 2021 was very much characterized as a technology growth-led market. That has never been really the benchmark strength of the UK. So I would like to see a normalized IPO market and see how London fits in with that. And in my view, there's still a lot of very good quality companies that should list here in the UK, and I think there'll be an attractive investor base for those companies.
Gareth, thank you so much for joining us today. Gareth McCartney, their head of EMEA Equity Capital Markets at UBS. Now, coming up, elections in Africa's biggest democracy. We'll get the latest from Nigeria as the results start to come in. We're live in Lagos next. This is Bloomberg.
think we can replicate Tesla. Tesla is a unique because when they found it, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open, everyone. 21 minutes into the European trading day. For the moment, we're holding strong with the DAX and the CAC 40 overall gaining some 1%. I have to say one of the notes that was most interesting this morning was JP Morgan strategists seeing underweight value versus growth as the next trade, possibly in 1 to 2 months. Now let's get straight to the Bloomberg Business Flash. Here's Samuel Etienne.
The UK and EU are said to be preparing to unveil a post-Brexit settlement on Northern Ireland. Our sources say the agreement will be announced after a meeting today between Prime Minister Rishi Sunak and European Commission President Ursula von der Leyen. A deal will seek to fix trading arrangements governing Northern Ireland. Bloomberg has learned the US held talks recently with 3 Asian nations on the global semiconductor supply chain. A Taiwanese official says the video meeting of the so-called Chip 4 group discussed an early warning system to ensure steady supply. We're told export controls weren't on the agenda and that no companies were involved in the meeting. A classified intelligence report by the US Energy Department has reportedly identified a Chinese lab leak as the most likely origin of COVID-19. According to the Wall Street Journal, the conclusion was reached due to new intelligence, though the judgment was made with, quote, low confidence. The US National Security Advisor said he could not confirm or deny the report. And HSBC is reported to be looking for a new global headquarters, less than half the size of its current space in London's Canary Wharf. The Sunday Times says the bank is considering an office of between 400,000 and 500,000 square feet. HSBC is looking to cut global office space by 40% compared with pre-pandemic levels. That's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Samuel Etienne. This is Bloomberg. Francine.
Etienne, thank you so much. Now, elections in Africa's biggest democracy have been marred by glitches in a new voter ID system. Nigerians were forced to endure long lines at some polling stations after the electronic system caused delays over the weekend. Well, Bloomberg's Jennifer Zabazaja is in Lagos for us. Jen, good morning. So how's the vote counting on the ground?
Right. I mean, Fran, anyone that you speak to here on the ground will just tell you that they're pretty frustrated that about 2 days out from when people officially started voting, we still don't really have many results. What we do have at this point in time, when we woke up to Monday morning, were the results from one state, and that's the state of Ekiti. It's a small southwestern state here in Nigeria. Very small, but at this point in time, we know that the ruling party candidate, Bola Tinubu, won that. But we still need to wait for 35 other states plus Abuja to find out who is going to be the actual presidential candidate. And really what we're watching for here this morning is the declaration by a number of other states, including Lagos State, which is where I am right now. It accounts for 40% of the country's GDP. It's the commercial hub here in Nigeria. And really seeing who will potentially win this particular state is going to be critical. It's for the past few decades, Tinubu and the ruling party has been the predominant party here in Lagos State. And so if the Labour Party candidate, Peter Obi, which going into this election, he was really leading in the polls, if he makes some headway and maybe closes the gap or potentially even wins Lagos State, that could be an indication for what we see across the country. But still a lot of frustration on the ground because this counting is really not moving fast enough, as well as the voting itself didn't move fast enough, Fran.
So, Jen, what exactly is on the ballot for, this huge economy, Africa's biggest?
Africa's biggest economy, of course, and really, a lot of the issues that we've been seeing, we've been experiencing here on the ground. There's a Naira shortage, there's a fuel shortage, and so although we are seeing cars now driving about, that hasn't exactly been the case over the weekend. Of course, there was a restriction of movement, but a lot of drivers that we have spoken to have just talked to us about the frustration that they've felt because of these scarcities. And so the president that comes in is going to have to deal with that on top of inflation being close to 22%, unemployment being north of 33%, with a lot of young people not being able to find job opportunities or business opportunities. And really, they're going to need to get international investors back into this economy. We saw foreign direct investment in 2022 drop to a new low, and a lot of that has to deal with a lot of the issues around the Naira and this economy as a whole. And so this next president really is going to have his hands full coming into really what's been a detrimental and disastrous really economy for the past few months, and really needing to get it back on track, not just for this country, not just for Nigerians here, but for the region, the continent as a whole, and of course for the whole entire world, because this will eventually be the third most populous state. Fran.
Jen, thanks so much. Jennifer Sabasaja there in Lagos for us. Coming up, we are talking to Russell Hardy, the Chief Executive Officer of global energy trader Vitol. An exclusive interview next.
Somebody says, I want to be, and a person has an impact on society, what would you recommend that somebody do to train themselves and to work their way up to be somebody that's impactful on society?
Well, I think the first thing you've got to believe in something that you really care about. I've been fortunate that over the course of my career, I've come up with things that have mattered to me, and I've pursued them. The best advice I ever got was from Mike Bloomberg. And he said to me at one point, he said, show me somebody who's never lost, and I'll show you a loser. And I believe that if you believe in something, go after it, take risk. Obviously, they should be smart risks, but they should be around things that you really care about.
So you would see your legacy as being actually target ALS and helping to moderate the impact of ALS, if not curing it.
That's my final legacy. I'm proud of some of the other stuff that I've done as well. Transformation of New York after 9/11. I'm also incredibly proud of a lot of the companies we created at Sidewalk. But I feel like I've done a lot.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. The FTSE trades higher as the UK appears close to reaching a Brexit deal, with Rishi Sunak and Ursula von der Leyen set to meet today in London. European markets are in the green despite Asian stocks broadly flipping following Friday's inflation-induced sell-off. Plus, the chief executive of Vitol, Russell Hardy, joins me here on set shortly as International Energy Week kicks off. Don't miss that exclusive conversation. So overall, this is what equities are doing. We did think that we were going to open lower, mainly risk-off. We did not get that. If you look at equities across the board in Europe, we have the FTSE gaining 0.8%, but actually it's really the DAX and the CAC 40 that's powering ahead. Now, investors concerned over riskier assets coming in the wake of this unexpected personal consumption expenditure price index on Friday, which is the Fed's favored inflation gate, seems to have been overblown. Today, it's very clear that actually they're ready to take on a little bit more risk. And then I would point to some analysts and banknotes, including JP Morgan, really interesting from their strategists. This is a picture for some of the sectors that are on the move. The picture across the board is that actually most of them are in the high. In fact, out of the 20 industry groups that make up all of them, I think there's not one, going down for the moment. Although the one that's the most under pressure, down up only 0.2%. Now, International Energy Week returns to London for the first time since the pandemic. Oil traders will meet to discuss major issues facing the sector, including the impact of China's reopening on demand and how sanctions on Russia could affect supply. Well, joining us now is Vitol's Chief Executive Officer. He's Russell Hardy. Russell, thank you so much for joining us here in the studio. I mean, it's amazing what the energy sector has gone through over the last 12 months. Are you looking at record profits once again?
Well, profits we don't discuss openly, which I think most Bloomberg guys know. But yeah, it was a very interesting year, strong year for the company, but also lots of fires to fight as well.
So what does that mean for the next 12 months? Can you, if you look at the strength that you've seen so far, does it stay on that trend for the next 12 months, or are we going to see bumps along the road?
So I think people are very interested in gas and power for very good reasons, because it affects a lot of European consumers, and the way I describe the gas situation is, we're sort of 2-1 up at half time. There's still quite a long way to go to resolve some of the supply-demand difficulties. This winter, we looked at some statistics, and domestically across Europe, consumers have consumed 13% less energy than they would otherwise have done because they're trying to economize. There's about another 10% saving coming from the weather. So we've consumed about 23% less energy this winter as a result of the weather and people changing. So that's really helped the supply-demand situation and left us in a much better position at the end of winter.
But China's reopening.
Well, China, yes, is reopening. Obviously, that's a little bit more of an oil story rather than a gas and power story. We've seen them emerging in the LNG market and beginning to buy some additional volume of LNG now that prices have sort of normalized somewhat. They're still very expensive, but prices have normalized to about $14. But on the oil side, yes, they're emerging, and across the oil space, demand is expected to hit record levels in the second half of the year. Everything is growing probably in excess of 2019, with the exception, gasoline's fairly flat with 2019, and jet fuel is still in catch-up mode because there's still a lot of reopening happening.
So going forward, I mean, we used to talk about peak oil. I mean, will that ever? When does that happen? Does it get just delayed because of the war in Ukraine?
Well, I think if anything, it has come forward a little bit, because if you think about the IRA and you think about Repower EU, it's going to be an enormous amount of investment into renewables and sustainable energy, and so that will bring that peak date, which people think is somewhere between 27 and 32. It's very difficult to estimate, but we've got it somewhere between 28 and 30, that's creeping forward as sustainable energy comes to the fore and people invest in that field. If you look at just an interesting stat, there are about 300 million cars in China, 300 in the US, and 300 million in Europe. And last year, about 13% of those registered were new electric vehicles.
And so that will just only increase, right? As
exactly,
we
yeah,
move forward.
yeah. That trend started, and those three markets are really the key markets for electric vehicle. China because of technology, and Europe and the US because of wealth.
Russell, what did you learn, with the sanctions that we put on Russia? They're selling, actually, a lot of their commodities elsewhere. Are these sanctions working?
I think they are. The crude oil market sorted itself out before Christmas. The ban came in on December the 5th. Most of that oil is now making its way to Asia. I think it's well known that it's going to India and to China. Obviously, it's a long route, and it creates some logistical challenges, but products, the ban came into force on February the 5th. Again, we had a bit of time to prepare. Europe's not under any pressure at the moment in terms of oil inventories. We're reasonably comfortable, and so we can afford for that oil to again make its way to further fields. But yeah, there are a lot of logistical challenges, and I think that's why you've seen Russia indicate that they may have less exports over the next couple of months, because they're wrestling with trying to get it all organized.
What have you learned in the last 12 months when you look at the energy complex? It's incredible, actually, that we're finishing in a stronger position a year on from when the war started.
Well, I think the thing to take away from it is that we have to have long-term planning around energy, and short-term fixes are difficult. So investment, both in traditional as well as transitional and sustainable energies, is important. And we as a company, we have a lot of capital spending plans. We have a lot of industrial businesses, and we spend about $1.5 billion a year on capex to strengthen our energy flows. And I think that's really the message of the last 12 months is corporates need to continue to invest in different types of energy to ensure that supply security.
I know you won't talk to me about earnings, but I think you made about $4 billion in 2021 as a company. Is 2022 the year where a lot of the industry is kind of feeling uneasy about some of these profits, these huge profits, when the world we live in is very difficult?
Yeah, I think consumers have had a tough time, not only in Europe but all over the world, and we understand that. So I think the way we can respond is exactly that investment point, putting more money into future energy sources, renewable as well as traditional energy, and that in turn will bring prices lower in the future. And I think most companies have focused on that future investment as a counterbalance to the profitability of 22.
And this is a real transition, because the critics will say, look, this is token investments in renewables, but the bulk of the business is still extremely polluting and something that serves countries that may be on the wrong side of history.
Well, I think the policies are pretty well set. Transportation. We're on a very rapid path to decarbonisation electric vehicles. So I think that's something to look forward to. Manufacturing of cars has to catch up with demand, and as I said earlier on, I think there are about 6 million electric vehicles registered in those 3 centres last year. Obviously, that's going to grow, and that's going to slowly impact oil demand. But I think one of the points to take away from 22 again is that most people want to move in that direction. Most people are putting investment plans into that, but it takes time. It takes time to build a fleet of electric vehicles and a fleet of factories and batteries behind that. So it'll be progress, but we'll have to measure it year by year.
Ursula, give me a sense of where you expect the price of oil going. And one of the other things that we're trying to figure out is actually how much Russia is selling some of their own oil, the Urals oil, to Asia.
So obviously the logistic cost of getting Russian oil all the way to Asia is high, and the Asian customers are demanding discounts, and so I think the netbacks to Russia are relatively low, but in terms of price direction and where we think things are going, I mean, in the very long term, investments still needed in hydrocarbons because we have decline and we're going to need new sources of production in future. In the short term, we're quite comfortable at the moment. Right. The market's got a reasonable level of stock for the next 6 months, but we do expect things to tighten in the second half of the year. So I think the prospect of higher prices in the second half of the year in the sort of 90 to 100 range is a real possibility.
How does the fracking complex in the US change the equation?
Well, it's still very productive over there. Production's still continuing to increase. It was 700,000 or 800,000 barrel a day year-on-year increase last year, and it'll be about the same this year. It's not the same as it was in 15, 16, 17. The investment climate is more disciplined, and inflation is biting a little bit around the edges, so that people are not doing marginal activities. They're sticking in the fairway. So steady growth, but again, probably not growth forever, because the shale patch is only so big, and a lot of that territory is being drilled already.
Russ, I mean, the other big question over the last 12 months is actually how we price a lot of the energy complex in Europe, and especially in the UK. Do you think that will change?
Yeah, I mean, there is a regulatory discussion going on at the moment within the EU about how to try to separate out different elements of the power market, because I think it's been widely reported that the marginal cost of power production comes from gas. Generally, that can be a relatively high price. And is it fair that a solar park or a wind farm or a nuclear plant achieves that same market value? So I think where we're going is to separate out the must-run type of activity from the marginal activity and try to price the two in two different buckets to help consumers.
Russell, thank you so much for joining us today. Russell Hardy, the Chief Executive Officer of Vitol. Coming up, Goldman Sachs leaders take the stage ahead of an investor day tomorrow. We'll outline what the Wall Street firm is looking out for next. This is Bloomberg.
CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
40s.
Could face bigger challenges next.
Was going to keep rate while
This is a 3 as the economic picture does. The BOK is getting ready to make a decision.
Right now, stay the course. It is not the time to debate whether we have the right inflation target, because that debate would swing us away from the main purpose, central banks to bring back price stability. It is important for consumers and it is important for investors that we return to price stability. And of course, as we make progress to see inflation, including core inflation, going in the right direction, there can be a discussion around how does the future of central bank targets look like. It is true that what we're seeing are some structural factors that are going to impact price levels. For example, moving away from cost being the only definer of where you place production to also security of supply. Well, if we are to provide some backup for security of supply, that would increase cost of production, and that would have systemically significance for the level of prices. But right now, we have to win the fight against inflation, restore price stability as a foundation for growth. Because if you look at where we are in terms of growth, we are not in a great place.
Georgieva with Bloomberg, says Linda Armin. Now let's look at your Bloomberg's First Word News. The UK and EU are said to be preparing to unveil a post-Brexit settlement on Northern Ireland. Our sources say the agreement will be announced after a meeting today between Prime Minister Rishi Sunak and European Commission President Ursula von der Leyen. A deal will seek to fix trading arrangements governing Northern Ireland. Bloomberg has learned that the US has held talks recently with 3 Asian nations on the global semiconductor supply chain. A Taiwanese official says the video meeting of the so-called Chip 4 group discussed an early warning system to ensure steady supply. We're told export controls weren't on the agenda and that no companies were involved in the meeting. A classified intelligence report by the US Energy Department has reportedly identified a Chinese lab leak as the most likely origin of COVID-19. According to the Wall Street Journal, the conclusion was reached due to new intelligence, though the judgment was made with, quote, low confidence. The US National Security Advisor says he could not confirm or deny the report. And Hong Kong is reportedly looking to scrap its mask mandate as soon as early March. A local newspaper says indoor and outdoor requirements may be removed at the same time, though masks would still be compulsory in hospitals and other high-risk places. The mandate is Hong Kong's last pandemic restriction. That's Global News, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Samuel Etienne. This is Bloomberg.
Etienne, thanks so much. Coming up, we're back in Barcelona for more from the Mobile World Congress. We'll discuss the outlook for Europe's space sector. That's coming up next, and this is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Welcome back to the Open, everyone. 50 minutes into the European trading day. For the moment, actually, the market's pushing higher after Wall Street's worst week. That was last week. Traders coming to terms with central bank policies. For the moment, it seems that they're taking that in their stride, with the European Stock 600 gaining 1%. So global giants of the telecoms industry are gathered in Barcelona for Mobile World Congress, where they'll discuss the future of connectivity. For more on all of this, let's go straight Tom McKenzie, who's in Barcelona for us with an important conversation. Over to you, Tom.
Francine, thank you. Look, I know that Francine Lacqua has an obsession with Elon Musk. Elon Musk takes us to SpaceX, SpaceX takes us to Starlink, and then the European response to that satellite constellation. And that brings me to my next guest, Xavier Lobor, who is the head of Future Telecom at the European Space Agency. Xavier, thank you for joining us. The European Union expected at some point in the next few days, possibly this week, to give us more details on their plans for a sovereign satellite constellation called IRIS-2. What is the importance of having a sovereign satellite constellation for the European Union?
Yeah, thank you. It's very, very important. I mean, as we are moving towards a digital society, having connectivity everywhere is paramount, is critical. It's not just for the citizens, it's also for the businesses, for the critical functions. And it is a unique moment that Europe has realized that satellite connectivity is strategic. And at the highest political level, they have set up a program to build an infrastructure and to deliver secure communication services. And the angle of sovereignty and security is the realization that with the increasing number of threats in the connectivity, as well as the geopolitical situation, there was a...
And on that point, China, as a threat, China's activity within this space, how front of mind is China for you and for the European Space Agency when we're thinking about that sovereign satellite constellation?
Well, I mean, we just look at the needs from Europe, and this is what is important to take into account. I mean, there was a realization in the political high-level agenda that Europe needed its own sovereign, secure means of communicating through space, not relying on the private sector or not relying on third-party nations. And this is the main reason for having a dedicated infrastructure at IRIS².
And it's potentially a huge boon for the satellite companies like EU-Telsat, based in France, but also Airbus. Can EU-Telsat, as an example, can it bid, that French company, on IRIS² even though it's merged with the UK's OneWeb? Does that preserve the sovereignty?
This is not something, I mean, the European Space Agency is supporting the program. The decision-making process is done by the European Commission. And we are independent bodies that we are cooperating very, very strongly together. I believe that, yes, they are. But, I mean, what will be the nitty-gritty of defining the security aspects, what is called the hard governmental services, is something that we will have to go along the way. But definitely, I mean, now everybody is welcome to participate into the process.
Does Brexit make it more difficult sitting at the ESA, working with the UK?
Not for us.
Okay.
I mean, the European Space Agency is an intergovernmental body that is independent from the European Union. The UK is a very strong partner of ESA, the same way as Norway and Switzerland are. Non-members of the European Union that are strong members of the European Space Agency. If anything happened with the Brexit, is reinforcing the participation of the UK into ESA, because we are allowing an international cooperation that they had lost through the European Union.
What more can the European Space Agency do to support startups, to support the space industry going forward?
Yeah, well, I mean, we have been, it's part of our DNA, in particular in telecommunications. We have been, operating on the basis of supporting the European industry, from the large primes and the satellite operators down to startups. And we do that from technology down to applications, big systems, smaller systems, so on and so forth. So, I mean, it has been, for the last 20 years, we have been operating basically on a mode of public-private partnerships, in which, I mean, we receive proposals from industry and we support innovation. Innovation with capital letters, I would say.
What are the future technologies that you're looking at now?
Yeah, so now in terms of connectivity, we are looking into 5G, the role of satellite in 5G and beyond. And I mean, we are starting efforts in particular on 6G. Even if the definition of 6G is not yet there, we realize that this is the moment, because everybody in this community is saying without satellite, 6G will not be possible. So we decided to take an early step into the process, and we are setting up an open innovation laboratory as a way of setting up a collaborative environment with the terrestrial people everywhere.
Xavier Lebois, thank you very much. We've run out of time. Thank you very much indeed. The head of Future Telecom at the European Space Agency. Francine.
I'm looking forward to more space conversations. Thank you so much, Tom McKenzie in Barcelona. That's it for the European Market Open. Surveillance Early Edition is up next. For the moment, European stocks pushing higher, and this is after Wall Street's worst week since December that saw traders come to terms with central bank policy that may actually remain restrictive for longer than thought on both sides of the Atlantic. This is Bloomberg. What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. What's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I try and play that role.
do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions. This is Bloomberg Surveillance, early edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Rishi Sunak and Ursula von der Leyen meet today in the UK on the cusp of an agreement on Northern Ireland, but the Prime Minister still faces obstacles in selling any deal. Investors weigh up rate bets following hot inflation data from the U.S. We speak exclusively to Andreas Utermann, chairman of the Swiss asset and wealth manager Fontobel. Plus, Nigeria's election results have been marred by glitches in a new electronic system being used to verify identities. We're live in Lagos. So we start with our top story. And EU Commission President Ursula von der Leyen is on her way to the UK to meet Prime Minister Rishi Sunak to finalize a deal on a post-Brexit settlement for Northern Ireland. Now, speaking to Bloomberg earlier, the UK Shadow Chancellor of the Exchequer, Rachel Reeves, said Labour will support the government on a Brexit deal.
We hope that the deal improves upon the Northern Ireland Protocol. And we've been very clear. Labour are the party of the Good Friday Agreement secured 25 years ago. We'll do nothing to put that in jeopardy. We're not going to play party politics with this.
Now, for more on all of this, we're joined by Bloomberg's Lizzie Burden, who's in Westminster in central London. So, Lizzie, talk us through, good morning, first of all. Talk us through the choreography of the day.
Well, Francine, as you say, Ursula von der Leyen is set to meet Rishi Sunak around late lunchtime. They're expected to meet in Berkshire, which, of course, is the county home to the royal castle of Windsor. It's not clear yet whether she's going to meet with the king. There was controversy over the weekend, accusations that that would be dragging the royal family into politics. But if they can get a deal, and the expectation is they would, it would be weird, frankly, if they didn't after all of this hype. Then they will come back to Westminster. There'll be a cabinet meeting at which the Prime Minister, the Foreign Secretary and the Secretary of State for Northern Ireland will brief ministers on the deal. Then there'll be a joint press conference between von der Leyen and Sunak, taking questions from the press, and then Sunak will make a statement to the Commons. Now, we're not expecting a vote to take place today, but when it does, it's expected to be a three-line whip. And as you heard there from Shadow Chancellor Rachel Reeves, Labour has offered its support to get a deal through Parliament.
So, Lizzie, can the Prime Minister get the backing needed?
Well, the Democratic Unionist Party and the hardline Brexiters within Rishi Sunak's party have scuppered the plans so far, but it seems that he's been on the charm offensive over the weekend, trying to make any last-minute tweaks that they need to get on board. There have been DUP hardliners saying that they're not going to get on board with anything that keeps part of the Northern Ireland Protocol, but the DUP is a broad church, so Sunak will be hoping that he can still get a deal through. The other issue is that he's on resignation watch for Steve Baker, the Northern Ireland minister. He reportedly was left out of the talks, but he gave a thumbs up to the cameras as he came out of Downing Street over the weekend. Read into that what you will. There's also Boris Johnson, the former Prime Minister. He has said that Sunak needs to keep the Northern Ireland Protocol bill as the gun on the table with Brussels. It, of course, allows the government to override unilaterally parts of the Northern Ireland Protocol. And Liz Truss, the other former Prime Minister, was instrumental to drawing up that bill when she was Foreign Secretary. She's not going to want to drop it. So it may look very weak of Rishi Sunak if he loses their support and he has to rely on Labour to get a deal through Parliament.
Lizzie, thanks so much. Lizzie Burden at Westminster here in London. Now let's dig into this with our two guests. Janet Moy, head of market analysis at Brewin Dolphin. Also joining in the conversation, our markets reporter, Christina Kina. So thank you both for joining us. Janet, when you look at Brexit, I don't know how that changes your view of the market or what that means going forward.
Hi, good morning, Francine. Thanks for having me. We still don't know exactly what is the shape of the entire deal, but I think any deal that involves less red tape, less disruption to trade, less paperwork for companies, I think that would be good for growth going forward. And also that would provide more clarity and confidence for businesses to invest. I think, fixed investment is a perennial weak point for the UK ever since Brexit. So I think that would be great. And of course, if the supply chains are improved because there is less red tape, then obviously that's good for inflation. So generally, that would be a good thing for the UK economy if the deal reduces red tape.
Christine, I mean, we're very thin on details, and as always, the devil's in the detail. But how could that change investment opportunities in the UK?
Well, Francine, as Janet was saying, right, I think it really will have to do with the bureaucracy that businesses are going to have to deal with. And if there's any chance that the deal at all kind of reduces some of those challenges, we've seen how exactly all of these kind of situations can really blow up in the face of the UK economy, what with supply chain difficulties at the border and whatnot. And so anything that kind of takes us away from that very dire situation certainly could be good news for businesses, especially because a lot of them at the moment are struggling with a bunch of other things, right? The cost of living crisis, having to kind of find staff, given it's a very tight labor market. So less effort on this front helps a little bit at the very least.
Does it change what the Bank of England could do?
Yeah, it's going to be interesting. I think this probably weighs into their calculus for growth in terms of the potential that businesses have in propelling that. I mean, we've already seen some green shoots and promising signs from the business side of things over the last couple of weeks with some of the data that we've been seeing. And so that's really quite a good news for the Bank of England, which themselves are now saying that they're expecting a shallower recession than maybe previously thought.
Jan, overall, it's very clear that it's inflation and what that means for Fed forecasts that is moving and changing everything. Markets are now expecting Fed fund rates to be at 5.4%. That's pretty steep.
Yeah, we have seen quite a big reevaluation of the peak Fed funds rate and the duration of elevated rates over the past couple of weeks, and that's why the markets have a bit of a wobble. We think that's fair because, there has been such a big disconnect between markets and the Fed, and we thought that, the Fed probably is right, given that they put priority on controlling inflation. And as we saw, the inflation data, I mean, it is coming down, but last week's PCE data was pretty bad for market participants, given it is still elevated, it is still pretty sticky. And that is likely to stay given the state of the labor market, right? So far from what we have seen is all resilience in labor market and also spending data as well. So I think that would keep the Fed hawkish.
Yeah, and we are expecting a hawkish Fed. The concern is then actually to understand what the Fed does, we have to understand inflation. And again, that has a huge interrogation mark.
Absolutely, Francine. I mean, we asked investors this in the latest MLive Pulse survey, which is out today, and you can see it via John Arthur's column. And basically, yeah, there's a big debate over the trajectory of inflation and how that factors into what we're going to see of the U.S. economy this year. I think the consensus from that survey is that if inflation does get at least below 3%, so not even necessarily to the Fed's target of 2%, but just that under 3% mark, and growth doesn't slow materially, then that would be considered a soft landing. But for those things to kind of come together, right, like growth kind of slowing down but not too much, and then inflation getting below 3%, I mean, you have to have a lot of stars aligning for that situation.
Yeah, speaking of stars aligning, we also understand there's a China lithium probe which is shutting down about a tenth of global supply. Now, it's breaking news, so we're trying to figure out more on it. But how do you view China in this context?
Yeah, so I think this is an incident that may worry market on the supply of resources. I think that brings us to a longer-term issue on China, which is the geopolitics. So the U.S.-China tension, I think this would continue to bother investors because this is just one-off incident. But I think for investors, we worry about the general resource nationalism because China holds so much of the rare earth and important commodities of the world. And if there is an escalation of U.S.-China tension, there is a risk that China may withhold some of its important resources, and that would obviously disrupt supply chains, bad for trade, raise prices. So I think this is something that investors will have to consider for the longer term.
And Christine, what are some of the big questions that you're asking on the live blog? So we have also a note by JP Morgan talking about value versus growth. Like, what do you think will be the catalyst for some of these markets?
Yeah, I think that's going to be interesting, Francine. I mean, it really is all about kind of how investors are wrapping their heads around this new inflation trajectory and what the Fed or central banks are expected to do to tackle that. And yeah, the value versus growth debate, I did see that that's going to be quite interesting because, the argument argument is that, oh, this year is going to be a great year for value, especially in the European space. And so the fact that JP Morgan is kind of making the argument for the other side and making the case for growth in this sort of environment where it's high inflation, a lot of expectations for growth to at the very least slow down. That's quite a bold call, I would say. But, you know, growth has definitely had its challenges with the tech slowdown last year that we saw, and still a lot of valuation issues that we're facing at the moment. I think it's going to be a case of, yeah, how much further do those valuations come down? They're still quite lofty at the moment, but, you know, once investors really get a grip on what the new higher rate trajectory is going to do to asset markets, I would expect those valuations to reprice to the downside.
All right, Christy and Janet, thank you so much for joining us. Janet Moy, head of market analysis at Brewin Dolphin, Bloomberg's Christina Keener. Now let's get straight to your stocks on the move. Today with the Northern Ireland Protocol flavor, our Joe Easton from our equities team joins us. Joe, what do you have?
That's right, Fran. So we wanted today to look at some of the stocks most exposed to the UK economy. So we're going to start with M&S here on the screen.
Great, thank you so much.
In the retail space, it's the middle income of the UK economy, so really exposed to some of those concerns, not only around Brexit, but also the cost of living crisis. That stock up today, did see it up around 1.5% when I last checked on my screen. Gaining with the pound, potentially a bit of a boost there, given that a lot of their income input costs are in pounds, so that would be a benefit. But we do see that heavy loss over the past year, given the cost of living crisis, as I mentioned. Then I wanted to look at Lloyds. This company makes 100% of its sales in the UK, so it's the only FTSE 100 bank that is purely UK-based. And their corporate lending was really hit quite hard due to Brexit, given the uncertainty around investment in the country, also those supply chain issues. Some companies held off from doing those loan deals. That stock was also up in early trading, about 1% as well. You can see it's kind of recovered from that big slump we saw in September, given the mini budget fallout. Though, of course, the main issue there is the mortgage market, that not recovering, people putting off buying new homes. The final one I wanted to look at was JD Wetherspoon. As you know, I can't resist talking about the pubs anyway, but you can see that massive drop over the past year, down 45%. You'll remember that Tim Martin actually backed Brexit. He campaigned in favour of it. But then around 6 months later, he then complained that he couldn't get enough migrant workers to pull pints in his pubs. So I thought he deserved a special shout out there. That stock was trading at about 1,000 pence last year, now down to about 500. Big losses. That one heading up as well in early UK trading today.
Joe, thank you so much. Always good on a Monday morning to speak about the pubs. I 100% agree. Bloomberg's equity reporter Joe Easton. Coming up, Goldman Sachs Chief Executive Officer David Solomon will be put to the test as he faces stockholders at an investor day tomorrow. More on that next, and this is Bloomberg.
Coming out of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah.
So what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
moment news breaks, no one covers the world like Bloomberg.
6 people have died from these latest quakes, adding to the 41,000 plus people who've died in those major quakes 2 weeks ago.
A top Sam Bankman-Fried associate said to be nearing a plea deal.
How does that help build the case for the prosecutors against Sam Bankman-Fried?
Biden is here to say we will stay with Ukraine until the very end, and that's really a show of support as well for the allies.
Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, Goldman Sachs holds its second ever Investor Day tomorrow. This comes just weeks after acknowledging they have lost $6 billion in consumer banking since entering the market. Company leaders will be looking to rally investors around the stock and quell internal dissatisfaction. Now, for more on all of this, we're joined by Michael Moore, Managing Editor for EMEA Finance here in London. Mike, I mean, so much going on, right? And Goldman, I mean, we have this great story saying, look, this is a make or break moment for one of the units as the chief executive is really put to the test.
Yes, I think, you know, we're talking about that unit being the asset and wealth management unit. That has been for a long time what Goldman has pointed to is this is the path to us getting a higher multiple. We make a lot of money in trading, we make a lot of money in investment banking, but investors don't give that a very high multiple because it's so volatile, because it swings around so much. So this can be the steady ballast of our bank. That's what Morgan Stanley has done so successfully under James Gorman, and that's where Goldman is trying to get more credit, and I think the Investor Day will be a big piece of that.
Can David Solomon turn this around?
Well, if you look at a year ago, Jamie Dimon used his Investor Day to really kind of head-on take on criticism of the bank's spending and really, you know, kind of change the narrative of that. I think that's what Solomon will try to do here, kind of change the narrative. It's all been about the flop that was consumer banking, but if they can show some momentum in this other business that investors tend to like, that could help change some of the, you know, momentum of.
So momentum, so this is what negative narrative. So he basically, I mean, will he say that everything's on the table, and how much is his job on the line actually?
I think, you know, the stock has been doing okay. It hasn't been doing terribly, but if, you know, I think what investors look to is that difference with Morgan Stanley in terms of the multiple, which is a far cry from a decade ago when Morgan Stanley was looking up at Goldman. So I think they want to see a turnaround there. There obviously has been agita over, you know, the partner bonuses were cut pretty dramatically in what was a decent year for the trading and investment banking businesses. So I think it's about getting confidence back in the direction that they're going.
Mike, we also had actually some news on the legendary investor Warren Buffett. Like, what did we learn about the U.S. economy through what he put out?
Yeah, I think, you know, Warren is kind of, you can view him in two ways, as a stock picker and a business operator. And I think that dichotomy is playing out this year. You know, 2022 was really painful for the markets, but the growing expectation is that 2023 will be more painful for the economy. And we started to see signs of that in the slowdown in the fourth quarter, even though 2022 overall for his operating business for the railroad was pretty good, but the fourth quarter really started to show a slowdown in profit, and I think that's generated some concern because Berkshire is such a broad business and shows a lot about the real economy.
And one of the most fun weeks I've had was actually trying to follow Warren Buffett around Europe. This was ages ago when he was looking for targets. What did he say about buybacks?
So he has changed his tune a bit there. Like, he's more aggressive with the buybacks. He shied away for those for years, and partly because he views his stock as a better value than a lot of other companies out there. But he was very critical of the critics of buybacks, saying they don't understand economics if they attack this. And that's relevant on a political stage because there have been talks of increased taxes around buybacks, trying to force companies into more investment, and he does not think that's the right approach.
Mike, as always, thank you so much. Michael Moore there, who heads all of our EMEA finance. Coming up, the opposition are outraged after Nigeria's election results have been delayed. We get all of the details next. We're live from Lagos. This is Bloomberg.
don't think we can replicate Tesla. Tesla is a unique because when they founded, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but XPeng is XPeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, there was an interview with Christine Lagarde earlier in the weekend saying that they're expecting a 50 basis point hike for the month of March. Traders now pushing back against that peak ECB rate bets into 2024 for the first time. So we'll keep an eye on that. I'm not seeing a huge movement when it comes to euro dollar, and you can see the German 10-year yield 2.56. Now, results have begun trickling in from Nigeria's presidential election 2 days after voters in Africa's biggest democracy went to the polls. The country's electoral commission says glitches in a new electronic system used to verify citizens' identities won't have any impact on the results. Bloomberg's Jennifer Sabazaja joins us now from Lagos. So, Jen, good morning. How is vote counting going?
Yeah, Fran, I mean, what we're hearing from the Electoral Commission, as you just mentioned, was that there were a number of issues over the weekend, but that the results are not going to be affected. But if you talk to voters and a lot of people who did spend most of their weekend standing in line voting, they're getting a little bit frustrated by this fact, just because of what you said. It's been 48 hours since people actually cast their vote, and we only have results from one of 36 states plus Abuja. That state that we have as of Monday morning and as of this time right now is Ekiti State, which is a small state in the southwestern part of Nigeria. And the ruling party candidate Bola Tinubu won that. But really what we need to hear is a few more states just to get some indication of where this is headed at this point in time. And in particular, what we're paying a lot of attention to is Lagos State, where I am right now. It is the smallest state by area, but most important state. Really, if you think about the financial and the business community here in Nigeria, it accounts for 40% of the GDP in Nigeria, and it could be a massive indicator for where this is going. For the past several decades and several elections, it has gone to the ruling party candidate, which in this case is Bola Tinubu. He used to be the governor of Lagos State. So we're going to be watching to see where the Labour Party candidate potentially falls in there and what happens thereafter. But like I mentioned, we still have a number of other states that we're paying attention to just to get some sense of where this is headed.
So if you give us context, what's on the ballot for Africa's biggest economy, Jen?
Right. I mean, we're seeing people now driving around the economy. At least the economy, the business activity seems like it is picking back up after a weekend really of no movement whatsoever. But when you think about what this economy has gone through over the past several months and years, it's really been in decline. We have inflation that is up close to 22%. Unemployment is close to 33%. There's a lot of young people here that are educated or that are not in school that are waiting to get jobs. And what we've seen over the past year or so is a lot of them leaving this country. And so this next president is inheriting an economy that has really, Fran, back to you.
All right, Jen, thank you so much. Of course, the economy will be changing after a pretty disastrous couple of years. Jennifer Zabazaja. Coming up, Chairman of the Swiss asset manager Vontobel, Andreas Utermann. He joins us to discuss the industry and the economy for 2023. That's an exclusive conversation. This is Bloomberg.
Was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
The top names at the Fed are on Bloomberg.
Inflation is normalizing, but it's coming down slowly. I just think there's going to be a lot more inertia, a lot more persistence to inflation than maybe we'd all want. I'm hearing people still out there pushing price and trying to test where the levels of inelasticity really are. As the meetings go on this year, we'll see what happens. If inflation settles, maybe we don't go quite as far, but if inflation persists, maybe we'll have to do more.
Nobody covers the Fed like Bloomberg, your global business authority.
Rishi Sunak and Ursula von der Leyen meet today in the UK on the cusp of an agreement on Northern Ireland, but the Prime Minister still faces obstacles in selling any deal. Investors weigh up rate bets following hot inflation data from the US. We speak exclusively to Andreas Utermann, chairman of the Swiss and wealth manager Vontobel. Plus, Nigeria's election results have been marred in glitches in a new electronic system being used to verify identities. We're also live in Lagos. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the Swiss asset manager Vontobel recently posted a decline in profit for 2022 as the industry continues to navigate inflationary headwinds. Joining us now is Andreas Uterman, the chairman of Vontobel. Thank you so much, Andreas, for joining us. I have many markets questions, and then we'll get on to a little bit of the business. Overall, there's so much speculation, of course, on what inflation does in the U.S. That's changing the markets almost on a daily basis, given what we're expecting the Fed to do. Are you expecting a lot more volatility in markets overall?
Yeah, yes, I would, because as you quite rightly point out, we're going to go through a phase in which markets will anticipate inflation falling. They will then anticipate falling interest rates, and that will then be followed by renewed concerns about inflation like we're seeing at the moment. And I expect this to go on for at least the next 18 months to 24 months because the inflation trajectory is not yet fully set.
So how do you expect inflation to actually behave from now? And if the Fed were to bring it down to 2%, does it crush the economy?
Well, I think that's, for me, that's wishful thinking. I don't think inflation is going back to 2% at all. I'm not even sure the central banks really want that. They do want inflation to come down relatively quickly, maybe to below 5%. If that were to be achieved, that would be a great thing. I think the key issue here is speed, because if inflation doesn't come down very quickly, people's expectations will start to include higher inflation expectations, and that will make it more difficult to get inflation under control in the medium to long term.
But how quickly do you think it can come down? Does it come back on its own, or come down on its own, or is it really this monetary policy lag from last year?
Well, I don't think at the moment monetary policy is the real issue. I think it's energy prices still, and I think we've some aggressive forecasts for the UK predict 2% in the second half of the year. I think that's probably again quite optimistic. But I think the speed of the fall in energy prices and how that feeds through the economy will be one important factor, and then of course wage inflation. I mean, we're seeing wage deals that are well in excess of 5% at the moment in many countries, and that obviously, if that's repeated next year, is going to lead to higher wage inflation.
This is the first interview we do as chair of Vontobel. You used to be very generous with your time when you were at Allianz Global Investors in trying to make us understand the market dynamics. What do clients ask you most since you've been at Vontobel?
Well, they're clearly quite concerned about inflation and the purchasing power of their money, and that's actually not dissimilar to the phase that we had going into this inflation phase, because people weren't getting any return on their assets. Now they're getting returns which are in excess of zero, but lower than inflation. So once again, we've got this issue of financial repression still at play, and that's the way. Let's remind ourselves why we are where we are today. It's because the budget deficits and the debt to GDP ratios in so many OECD countries are too high, and one of the ways to get this lower in real terms is financial repression.
But how long does that last for? I mean, forever. If you look at, I was reading something at the weekend over how much interest rate, payments for U.S. debt is back. I think they went from $1 billion to $2 billion.
Well, I don't know. In the long run, we're all dead, right? But I think it'll probably go on for the next.
For a Monday.
Yeah, for the next 5 years, let's say.
Okay, where do you see China going, and how much does that impact actually I guess your clients' worries going forward?
I think China, the question is, first of all, where do we see it going in terms of the macroeconomics or in terms of the geopolitical what do you mean?
Well, both. I mean, how do you see China actually, changing the game for how markets behave?
Well, I think one of the reasons why the COVID policies, the repressive COVID policies were lifted so quickly was that the economy was really taking a hit.
Yeah.
And so I think one of the critical factors is going to be, how does the Chinese economy recover? Are we going to see some positive growth? I think that's got to be top foremost at Chinese policymakers' minds, and that's probably why the geopolitical tensions out of China are slightly less than they were 3 or 4 months ago. So economy first. That, of course, would be good news for the global economy and would give us a higher probability of a soft landing, which is kind of what we would like.
Just talk to me a little bit about outflows. So you reported some full-year results for Vontobel two weeks ago, I believe. What were the main driver? Why did you see outflows?
So we had outflows in asset management. We had inflows in private wealth management. Neither of which particularly surprising. And then we had lower trading activity for our structured product business. So overall, that's the context for the lower operating profits that we reported. Now, you know as well as I do, we've discussed this many times on the show, active asset management is still under pressure. And in particular, when markets sell off, obviously all global asset managers have seen drops not only in AUM levels, but also net outflows. Now, Vontobel's strategies are very active. We really take risk for clients, and of course, active strategies, which had a long beta, principally suffered most last year. We're seeing this recover quite significantly already this year.
And so it comes back, so the trend is now a recovery and stabilization?
Well, performance is certainly recovering, and that goes not just for the more aggressive equity strategies that we have, such as our qualitative growth strategies or emerging market strategies, but also for our fixed income strategies, for instance, those of 24 Asset Management out of London here.
How interested are you in the US? And actually, does that mean, how do you grow in the US?
Very well. That's a critical question, isn't it? I mean, everybody needed to, in the last couple of years, I think, readjust their business strategy to the new global geopolitical realities. For Vontobel, that has meant a real reinforcement towards the developed markets. And let's not forget, most of the savings, 90% plus of the global savings, are in the developed markets. And of course, the United States, the United Kingdom, Canada, Australia are key in those markets. And therefore, we are reinforcing our effort in the United States, both in terms of the institutional asset management, but also for private wealth management. As you know, last year, we took over the US offshore private client wealth management business from UBS.
But so does that mean you could have further bolt-on acquisitions in the US to grow?
I wouldn't exclude that.
In terms of size, is there something that you could be targeting already, or something that you're looking at? Like, what would you like to own if everything was an option?
Well, I think one of the, you asked earlier about what our clients asking us for. One of the classic questions that we get is, what about non-public markets? Right. Non-public markets is currently not in our offer, neither institutionally nor for our private clients, but that's something we're looking at very carefully.
Are there good opportunities out there now because of depressed valuations? Or?
I think there's plenty of opportunities out there, not just because of depressed valuations, but simply because a lot of strategies were set up in the last 10 or 15 years, and they're looking, the founders potentially are thinking of what happens in the next 10, 15 years, and they would like longevity, I guess, in terms of survivability of their businesses for the long term.
And just talk to me a little bit about deleveraging. So how much deleveraging do you think we'll see in the system this year?
Well, hopefully quite a lot, because obviously it's driven by the central banks winding back their balance sheets. That's happening. And I think the quicker that happens, the better it is for the overall system. I think it's happening quite a lot already on the private client side. We're certainly seeing that. There's a lot of deleveraging there. And I expect that to continue.
But it seems odd, actually, if you look from, the interest rates go from like 0.5 to 4%, and we haven't seen more deleveraging or companies in trouble. Will that come?
I think that's coming. Yes, I think that's coming. And certainly you're starting to see that in the sort of startup scene, the sort of the early seed. There's quite a lot of carnage there. Valuations dropping very significantly. Companies trying to launch convertibles to finance themselves. So we're starting to see that there, and that'll obviously go, as the year or two progresses.
And this is across the regions, or more Europe and UK?
I think this is particularly the case in the Western world. So Europe, UK, United States. Yeah.
All right, Andreas, thank you so much. I need to pronounce Vontobel correctly.
That's it.
Is that it?
That's
it. Okay. I've finally done Andreas Uterman, the chairman of Vontobel. Coming up, we return to the Mobile World Congress in Barcelona, where IBM is showcasing innovations in AI and quantum computing. We speak to the IBM Vice President of Strategy next, and this is Bloomberg. What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I want to be clear, we are not yet seeing inflation going down to target fast enough. So central banks need to stay the course until we are comfortable that price stability is returning.
That was the IMF Managing Director, Kristalina Georgieva, urging central banks to keep up the fight against inflation. Now, global giants of the telecoms industry are gathered in Barcelona for the Mobile World Congress to discuss the future of connectivity. Bloomberg's Tom McKenzie joins us now from Barcelona with another great conversation. Over to you, Tom.
Francine, thank you. Yes, I am joined now by Marisa Viveros, flown over from New York, the Global Vice President of Strategy when it comes to telecoms, media and entertainment at IBM. Marisa, thank you for joining us. Let's start this show, Mobile World Congress. It used to be very much focused on the smartphone, on the consumer. It's shifted now to enterprise, and this is a space that IBM plays in significantly. What are you seeing in terms of the corporate spend within enterprise for your solutions, the hardware and the software? How much demand is there, and what are your corporate clients spending it on?
Yeah, so that's the, our corporate clients, which includes, many of the largest companies across all the verticals, including telecommunications, where we serve 85% of the largest telco around the world. If we think about the spend, now in sort of projecting into the future, cloud and hybrid cloud is clearly the hybrid cloud spend is going to dwarf almost any other spend. So the hybrid cloud, moving applications from one cloud to another, being less sort of vendor independent by doing that. We are using Red Hat OpenShift as our operating system that runs across all these clouds, and that's how we are presenting to our clients. The second area is AI and observability. So artificial intelligence has been around for more than 50 years, as you know. I think now we're finally making it ready, applicable, and really, producing concrete results. So we see that across the manufacturing plants. We see that sort of the operational technologies. We see that in banking, in insurance, of course in media, to produce films, to come up with trailers, in the telecommunication industry to operate the network. So that is sort of automation. Not to forget, from an IBM perspective, security is an area that we have invested for the last, I would say, 7 to 8 years. Security across the stack. Every time you have a technology shift, such as cloud, such as AI, then the hackers will be right on you to attack the system and to get to penetrate and produce damage. That includes manufacturing organizations. Hackers are always looking. So security, I would say it will never go away.
Okay.
So that's, and then, in hybrid cloud, obviously.
You're going to be meeting a number of your clients and partners over the next few days. How much caution is there? Are you getting a sense that budgets are being constrained given the recessionary risks, given the question marks about inflation, input costs?
I think it's all of us, the technology providers, are very worried about the spend. But when we talk to our clients, they are using this year as a transition year to do more innovation. So instead of saying, oh, lower my cost, of course there is something about lowering costs, and that's always going to happen because you can always improve, you can always have more optimization in your operations. But when it comes to getting ready for the future, customers are looking into how can I innovate, how can I have a new business, not only technology, but a business model that I can compete with with others in the market. New entrants are coming in, so they need to be ready for that.
Are you having to look across your team and make decisions around reducing headcount? Do you expect that to happen this year?
Absolutely. I mean, we're always shifting headcount where the needs are. But most important, we're always skilling our sales, our delivery, our product developers, product managers. We're always getting them more skills. In fact, we completed a 20 modules section, throughout the Christmas, New Year's timeframe, and everyone in the company had to take these modules. Every module was at least 5 hours, and it ended with hands-on. And those education were done from the lowest level in the ranks all the way to our senior vice president. So skilling that it could never end in this new environment.
The metaverse is a hot topic at the event this week. Is it the future or is it a fad?
We are always looking, as a technology company, and I've been in the technology industry for more than 30 years, from a research and from a development and a services perspective. We're always looking for new experiences. And we want to produce, get a new experience for everyone, whether it is for education, for training, have a new entertainment. Entertainment is going to drive this. Gaming is going to drive the metaverse, I think.
Are you pushing internally for IBM to put more resources towards
we are kind of selecting what are the plays for us in the metaverse, and we believe that it's a huge play in security, in identity management. So when you move from one metaverse world to the next metaverse, so your identity management, your security, your secure wallet, digital wallet, all of that's going to be super important, and that's what IBM is placing a bet. That and also co-creating with our customers. So we are in fact co-creating with a number of customers across multiple industries on how to apply the metaverse within that industry.
Just briefly, you touched on artificial intelligence. The critics would say IBM is lagging the likes of NVIDIA in providing the hardware needed to drive that revolution around ChatGPT and those kind of offerings. How do you close the gap?
I would say different. We were the first one. I remember whatever it was in October a few years ago when we announced Watson AI, and we were the first ones. Huge announcement. The next day, every company was AI.
Okay.
So I consider ourselves pioneer.
Okay.
And we continue to develop hardware. So we have already announced a processor, an AI processor, done by our research team here in Zurich. So we continue to evolve our technology. In fact, in the cloud, also we're working on a number of areas. How can we improve all these algorithms? So, we love it. We are engaged, and we know our role is to make it real.
Okay, Marisa Viveros, thank you very much indeed. The Global Vice President of Strategy for Telecoms, Media and Entertainment at IBM. Fran.
Tom, thanks so much. Tom McKenzie at the Mobile World Congress in Barcelona. Coming up, Labour's Keir Starmer is set to lay out his vision to boost growth in the UK as the government attempts to finally strike a trade deal with the European Union. We'll have more details next. This is Bloomberg.
of World War II into the 1950s, you mentioned that the Fed had imposed yield curve control, basically to finance the wartime deficit. They were trying to move off of that. These are all sort of familiar themes to anyone in 2022, but why was that difficult for them?
Well, so let's get a sense of scale, right? So in 1941, there's about $40 billion worth of treasuries outstanding. In 1945, there's about $240 billion worth of treasuries outstanding. So that's about double the pre-war GDP. If you scale that to 2019 and say, okay, COVID expenditures on the scale of World War II, that's about $40 trillion. And the question is, who's going to buy it? Yeah. And
so what we're dealing with is kind of nothing. We got it.
In that context. And so that's where I guess the analogy breaks down. But it's a very difficult problem, which is who's going to buy the equivalent of $40 trillion today in debt?
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Bloomberg has learned the US held talks recently with 3 Asian nations on the global semiconductor supply chain. A Taiwanese official said the video meeting of the so-called Chip 4 group discussed an early warning system to ensure steady supply. We are told exports controls were not on the agenda and that no companies were involved in that meeting. Warren Buffett has urged shareholders to keep the faith in the US economy after Berkshire Hathaway reported weaker results in some of its key businesses. Operating earnings fell 14% in the fourth quarter as higher prices hit its railroad and insurance units. In his annual letter, Buffett says he's just yet to see a time when it's right to make a long-term bet against America. Hong Kong is reportedly looking to scrap its mask mandate as soon as early March. A local newspaper says indoor and outdoor requirements may be removed at the same time, though masks would still be compulsory in hospitals and other high-risk places. The mandate is Hong Kong's latest pandemic restriction. And HSBC is reported to be looking for a new global headquarters less than half the size of its current space in London's Canary Wharf. The Sunday Times says the bank is considering an office of between 4,000 and 5,000 square feet. HSBC is looking to cut global office space by 40% compared with pre-pandemic levels. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now, Labour's Keir Starmer is due to give a speech in the next few minutes outlining his party's growth vision for the UK. The speech by the leader of the UK's opposition party comes on the same day that Prime Minister Rishi Sunak is also expected to seal a long-awaited trade deal with the EU. Now, for more on all of this, let's go back to Bloomberg's Lizzie Burden, who's at Westminster. So, Lizzie, what do we expect Starmer to say?
Well, Francine, he's going to be speaking at UK Finance. He's going to elaborate on the first of his 5 missions, which is to grow the economy, to make the UK the fastest growing economy with the highest sustained growth in the G7 during Labour's first term in office, if it can secure one. He's then going to have a boardroom discussion with corporate leaders alongside his Shadow Chancellor, Rachel Reeves. We spoke to her earlier this morning. Take a listen to what she had to say.
Today, Labour is publishing its own ambitions, our mission to secure the highest sustained growth for the UK in the G7 with good jobs and productivity growth in all parts of the United Kingdom and growth that is felt by everyone. All of our plans will be fully costed and fully funded, and that we have set ourselves a set of tough fiscal rules.
So Keir Starmer has said that he's going to be unapologetically focused on the long term. But the question I have, Francine, is how much money Labour is going to devote to childcare, for example. It would be expensive to make a difference to growth that way. And planning, that she also mentioned, is going to be controversial. So looking forward to detail on both of those.
Yeah, it's always a question of money and timeline. It's a big day for Brexit, with Labour's Rachel Reeves also reiterating the party will support the government's trade deal with the EU. So, Lizzie, what do we expect the deal to look like?
Well, we hear that it's going to be a 100-page document, although we've not seen it yet. No one has, much to the frustration of many MPs in the Conservative Party and the Democratic Unionist Party. The deal's expected to have three focuses: trade, addressing the democratic deficit, and Northern Ireland's place within the United Kingdom. But the deal is expected to go further than other prime ministers have secured, and the hope is that Rishi Sunak can get the Democratic Unionists and the Brexiters on board so that he can claim to be the prime minister who got Brexit done.
Lizzie, thanks so much. Lizzie Burden there at Westminster. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller in New York, Anna Edwards here in London, and this is Bloomberg. Is the chance of humankind to really understand itself. How much of that is true? How confident? Did you actually overachieve? Did you back then realize that we would be using AI in many different jobs? Was it slower or faster than you thought at the time?
I think if I had a 35 or 40-year prediction task, I would have been more or less on track as to where we are today. But I would have predicted steady linear increase over time. But instead, the field had very minimal improvements until the last 5 or 10 years. Then it really took off. I think we ended up in the right place, but I was very wrong about the trajectory. To this date, we still know very little about how the brain works, but these machines are getting ever more powerful. And I feel in some sense, we did end up learning what human intelligence is by learning what it is not. If we exclude all the things machines can do better than us as what makes us unique in our human intelligence, then now we can rule out many, many things, because AI or machine learning has become so good at so many things that what's left must be the key aspects of human intelligence.
Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
think a recession is likely. Will it be a deep recession? Probably not so deep.
We're looking for the recession in the second half of this year. Earnings going to reset.
Investors are not only trying to navigate the next 12 months, but because we're at a critical time in capital markets history, investors are rethinking their strategic asset allocation.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. The UK and EU appear to be on the verge of a post-Brexit settlement for Northern Ireland. Rishi Sunak and Ursula von der Leyen meet today for final talks. In Nigeria, opposition parties want results from Saturday's election released immediately. The ruling party is dismissing concerns that the vote could be rigged. And Goldman Sachs hopes to turn the page on a forgettable year. This week, the firm's executives will lay out new reasons for investors to get behind the stock. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Good morning to you, Matt. It is Monday, but it still feels like we're dealing with Friday. Markets doing their best, though, to get over that sort of post-PCE shock.
Yeah, exactly. We do see actually futures rising here. So after a surprise to the upside for inflation, a concern obviously for the markets because that means the Fed has to raise higher or at least hold there for longer. We see a little bit of a bounce in terms of S&P futures. Right now up just shy of 0.5%. We also see a continued climb in 10-year yields. So this actually provides a little bit of a headwind to stocks. Right now at 396. So getting ever closer to 4%, and we're seeing in a lot of durations actually more yield on treasuries than you can get in terms of an earnings yield on the S&P, especially when you get down to 6 months and below. You're looking at more than 5% yield on 6-month T-bills, and that's just about equal to what you get in terms of S&P, the earnings yield. Right now, the Bloomberg Dollar Index is coming off just 1/100th of 1%, but at 1257, 1258, that's the highest level we've seen in the Bloomberg Dollar Index since January 5th of this year. So that strength really continues in the dollar, even though today we see it coming down just a little bit. And then NYMEX crude also showing some strength again. I noticed that Brent was rising a little bit steeper. Right now, 76.63 is what we see on NYMEX crude, even though we see a lot of other commodities dropping. And actually, when you look at the Asia board, you'll see one of those, iron ore, coming down. Now, this is for a separate reason. China, the government has ordered some steel makers in a certain region to cut production pretty drastically by 30 to 50% ahead of some political meetings. And of course, that means less demand for iron ore. As a result, you see a 3% drop there. In terms of the overall market in Asia, off about 0.5% at the close. There weren't big movers in terms of the Hang Seng or the Nikkei. I did see that the S&P ASX 200 is down just over 1% at the close. That is pretty much an outlier, or at least it's the biggest drop among all of the other drops that we saw across Asia. And then I want to quickly look at the yen here. 136.36. So the U.S. dollar getting a little bit weaker against the yen, but from a relatively strong level. Anna, what do you see in terms of the European trade?
Here in Europe, then, Matt, we see positivity across the European trading space. So many of these markets up by more than 1.4%. Certainly the German and the French markets are pretty strong. The FTSE MIB over in Italy also up by 1.7%. And it seems that the European markets actually sold off a little too much on Friday in that sort of post-PCE shock experience for risk assets that we saw. Yes, it hit US markets, but it also hit Europe. And then US markets rallied a little bit away from those earlier lows. And so now Europe plays catch up with that. Although interesting to see that US futures are now pointing higher. So Stocks Europe 600 is up by 1.1%. The chemical sector up by 1.6%. That's really interesting because we'd seen that really heavily sold off during Friday's session. Did we sell off too much on that BASF story? And the sector is bouncing a little bit. Germany's 2-year yield, I put in here the yield, which is going higher. And we see this across many geographies, not in Italy, interestingly, today, but across many geographies, those yields still going higher, still catching up with the higher yield narrative that dominated in Friday's session. And now in Europe, more broadly in the Eurozone, we're thinking about whether we might not see a peak in interest rates until 2024, that for the first time being priced into markets. This is the pound, 119.67 is where we trade, up by 0.2%. And I put this in just because we are watching those Northern Ireland conversations very carefully, more from our colleague Lizzie Burden shortly. What kind of investment could be unleashed as a result of just more certainty around that relationship between the UK and the EU? Just want to mention another line coming through. This from UniCredit. I mentioned that the Italian stock market was doing pretty well today, and part of that is the banking sector. UniCredit headlines then suggesting that this bank is set to boost its 2022 bonus pool by about 20%, and that might fly in the face of the trend that we've seen for other businesses. Of course, many in the banking sector cutting back on those bonuses after what was a really tough year for many asset classes last year. But under Orchel, it seems that this bank is doing something different, has turned around and has been selling assets and returning some cash to shareholders as well. And now it seems it's standing out for other reasons. It is talking about higher bonuses than others, outperforming the rest of the sector. Now, let's get back to that Brexit narrative I mentioned. EU Commission President Ursula von der Leyen is on her way to the UK to meet with the Prime Minister Rishi Sunak to finalise a deal on a post-Brexit settlement for Northern Ireland. Speaking to Bloomberg earlier, the UK Shadow Chancellor, Rachel Reeves, said that the Labour Party will support the government on any renewed or rejigged post-Brexit deal.
We hope that the deal improves upon the Northern Ireland Protocol. And we've been very clear. Labour are the party of the Good Friday Agreement secured 25 years ago. We'll do nothing to put that in jeopardy. We're not going to play party politics with this.
UK Shadow Chancellor speaking there. For more, we're joined from Westminster by Bloomberg's UK correspondent Lizzie Burden. Lizzie, talk us through what happens today for an international audience who may be taking their eyes off this story.
Well, Anna, here in Westminster, we've seen the Northern Ireland Secretary and Minister, Chris Heaton-Harris and Steve Baker, heading into Downing Street. We haven't seen Ursula von der Leyen yet, but she is due to meet Rishi Sunak, the Prime Minister, in Berkshire, which, of course, is the county home to the Royal Castle of Windsor. We're not yet sure whether she's going to be meeting the King. There was speculation over the weekend and criticism today by a Brexiteer backbencher saying that it's not right to bring the royal family into politics. But after this meeting, if they can get a deal, we're expecting Rishi Sunak to brief his cabinet on the deal and then have a joint press conference with von der Leyen where they'll take questions from journalists and then he'll make a statement to the House of Commons in Parliament. We're not expecting to have a vote in the Parliament today, but as Rachel Reeves there said, Labour has offered the government its support to get a deal through Parliament. If Rishi Sunak's relying on that support, it may make him look very weak.
We've heard, I guess, some criticism that you mentioned there, but can Sunak win the support of Brexiteers and of unionists in his party?
Well, they have been what scuppered the plans so far. Rishi Sunak's been out lobbying MPs over the weekend, trying to get them behind a deal, but they haven't seen the deal. That's what's frustrating them so far. You've also heard from hardline unionists in Northern Ireland saying that they're not going to back anything that continues parts of the Northern Ireland Protocol, but it's a broad church, the DUP, so it might be possible to still get them on side. You've also heard from the former Prime Minister Boris Johnson, who's been banging the drum, telling Rishi Sunak that he needs to maintain the Northern Ireland Protocol bill as a backup plan, a gun on the table to have leverage against Brussels. And the other former Prime Minister, Liz Truss, played a big role in writing that bill when she was Foreign Secretary, so she's unlikely to want to drop it. So the headache remains for Rishi Sunak, and we will see when we have the deal whether he's going to be able to get it through Parliament.
All right, Lizzie, thanks very much. Lizzie Burden there reporting from Westminster. We'll bring you, of course, any breaking lines as they come, and if an agreement it comes, we'll bring you that as well. Now let's get to another big political story. The Nigerian ruling party's presidential candidate, Bola Tinubu, has won the most votes in a small southwest state as the results from Saturday's election begin trickling in. Voting in Africa's biggest democracy has been marred by glitches in a new electronic system. For the latest, we're joined by Bloomberg's Jennifer Zabasaja in Lagos, Nigeria. Jen, how is the vote counting going, especially with these concerns?
Right, Matt. I mean, it's been 48 hours since the voting actually started, and at this point in time, as you mentioned, Bola Tinubu, which is the ruling party candidate, he has officially won the most votes of one state. But we're also getting some reporting that he potentially won another state, and we're hearing some reporting too that there's one other state that's slowly coming in. So, you know, as we mentioned, results are slowly trickling in 48 hours after people began voting, but it's unlikely that we're actually going to see the next president, or the next president will be officially declared today, because there's 36 states within Nigeria that still need to report their official results. And in particular, what we're going to be watching out for is here in Lagos State, where I am. It is the most populous state within Nigeria. It accounts for 40% of the GDP and is really home to, it's the financial hub of Nigeria. So seeing what happens here, and in particular, whether or not Tinubu, who is the ruling party candidate, whether or not he is able to hold on to the state. But still, pretty early on, we're expecting a press conference in the next few hours, so hopefully we'll have an update after that.
Jen, so that's where we've got to on the counting and where we haven't got to yet on the counting. But give us the background, give us the context on what it really is people are voting on here. What's on the ballot for Africa's biggest economy?
The biggest issue, Anna, and the biggest challenge I think that everyday Nigerians are facing is really this issue with the Naira. We even saw earlier today the Naira weakened against the dollar ever so slightly, but I think it's still significant and just shows just how concerned and anxious people are about what this outcome is going to be. And what we're seeing right now, even in regards to the Naira, there's not enough Naira notes to go around. So without Naira, you can't pay people, you can't do business. And so it's really making it difficult for people in their everyday lives. And on top of that, there's also a fuel scarcity. And so this next president is really going to have to come in quite aggressively, I'll say, to deal with a lot of these economic issues that people are dealing with on a daily basis, and creating a lot of challenges for this economy, especially an economy that has slowed down in growth, is not producing enough oil as it is, isn't even refining its own oil as it is. And so the president is going to have his hands full with issues to get this economy back on track, Africa's biggest economy, and really going to be the third biggest and most populous in the world in 2050. So very significant.
Jen, thank you very much. Bloomberg's Jennifer Sabasaja reporting there from Lagos for us. Let's pivot back to financial services. Goldman Sachs holds its second ever investor day tomorrow, just weeks after acknowledging it has lost $6 billion in consumer banking. Company leaders will be looking to rally investors around the stock and quell internal dissatisfaction. Michael Moore, Bloomberg finance editor, joins us now with more on what we should expect. Michael, this really is a fascinating story, and there's the sort of broader context of things that have been weighing on Wall Street, and then there's the Goldman Sachs specifics around their foray into consumer banking, for example. So what's the message going to be from Goldman this week?
Well, I think the Goldman is going to try to move the conversation from the consumer bet that didn't quite work to the asset and wealth management business that they've been building for a while. And that is seen as potentially the way that this firm gets a higher multiple from investors. You know, the investment banking and trading businesses are quite strong. They've been strong for a long time. Investors don't give it as much credit because it is volatile, because it goes in up and down with the markets. Asset and wealth management is seen as a steadier business. Morgan Stanley has done a good job of balancing those two, and they've gotten a higher multiple than Goldman. So it's really trying to focus investors on the growth that they've got there and the potential opportunities.
I want to ask about, Michael, Berkshire Hathaway. They had earnings that, you know, at first glance look pretty fantastic, but then we see the rail unit earnings slipping, insurance unit earnings slipping. What do we know about Berkshire Hathaway, which came out over the weekend?
Yeah, as you say, it's kind of, if you look at the full year, record results, quite strong, you know, held up well. But in the fourth quarter, you did see that slow down in some of the big businesses, including the rail business, profit dropping there. So Berkshire has always been this proxy for the real economy, as it were. And that is, you know, generating concern that 2023 might be a tougher year, even if, you know, the markets perform a little bit better. In the real economy, that's where we'll start to see some pain.
All right, Michael, thanks very much. Bloomberg's Michael Moore talking to us about Goldman Sachs and Berkshire Hathaway. Let's take a look at some of the stocks that we're watching move in pre-market trading this morning. We have a few of them. CGen is one. You can see a big jump here in the pre-market. This is after the Wall Street Journal reported that Pfizer is in early stage talks to acquire the cancer therapy developer. Pfizer shares off just under 2% in the pre-market. BMO capital markets analysts were positive on a potential deal today, saying that they would expect a decent premium here, which is probably why you see Pfizer taking a little bit of a hit. Union Pacific said it's looking for a candidate to replace its CEO, Lance Fritz. As a result, those shares are up almost 6% in the pre-market. The railway company said it expects to name a successor this year after its board engaged a consultant in March of last year and formed a task force of directors in November. This according to a statement out yesterday, so watch this space in terms of Union Pacific leadership. Anna, you've got some breaking news.
Yeah, absolutely. I mentioned earlier on the moves higher that we're seeing broadly across a number of tenors when it comes to the European bond market space, and certainly that's the case in Germany. I was referencing the 2-year. Well, here we've got the 10-year, the yield climbing to its highest since 2011, and after we got that PCE data, of course, over in the United States, a lot of people asking themselves just how high these rates go on both sides of the Atlantic. Where are the terminal rates? And in the European context, we now have traders betting on a longer ECB rate hiking cycle, with the peak not seen until 2024, as I mentioned a little earlier. That seems to be the latest thinking in markets, and they're the reflection of that in the German 10-year yield, which has climbed to its highest since 2011. Coming up, we'll put questions around terminal rates to Karim Chedid, BlackRock Head of Investment Strategy for iShares EMEA. We'll see what he thinks of the rate outlook for Europe, and we'll be live from the Mobile World Congress. That's taking place in Barcelona. We'll be speaking with NVIDIA's Senior Vice President for Telecoms, and we'll be talking about how AI is shaping the next frontier in connectivity. This is Bloomberg.
As governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller in New York with Anna Edwards in London. Now, there's been a lot of talk lately about 0 days to expiry options. The fact that they could cause havoc in markets is something that investors have been worried about for some time. Joining us to talk more about this is Simon White, Bloomberg macro strategist. And Simon, you know, there have been a lot of effects of the rise of 0 days to expiry options. And the reason that we see this rise, I guess, is because they're now, trading on Thursday or closing on Thursday and Tuesday as well. So every day you have options expiring.
Yeah, I mean, that's one of the reasons why you've had that rapid rise. I mean, they accounted for 10% of option volume maybe 4 or 5 years ago, about 2018 sort of time, and now they're up to 50%. And so that's a very important key part. And the second thing is that you can sell these options without margin. So essentially allow people to take on extra leverage. And really what it's doing is it's the kind of real action is happening in these very short expiry options. So things like the VXV and the VIX, which are longer dated implied volatility indices, are not really reflective of what's going on. It's almost like, if the VIX is like a duck serenely swimming on a pond, 0 DTE are the legs frantically flapping under the water. So, I think if you really want to get an idea of what's happening in the market now, you don't really want to look at the VIX or the VXV. You want to go to the most active options page on Bloomberg. And that's what a lot of people are now doing before they look at the VIX.
Okay, so how dangerous is this duck then?
It could be potentially very dangerous. Its legs are potentially dangerous. I mean, look, it's not something that's necessarily going to happen immediately. And there's a huge amount of discussion in the market. Some people are quite relaxed about it. Other people are more kind of, incendiary about what it might actually do. But I think if you combine two things together, if you have people taking on extra leverage, and you have essentially, it's ultimately leading to repressed volatility because people are trading less in the longer dated implied volatility. So it's given the illusion of lower volatility. Put these two things together in markets, it rarely ends well. So I think that it's not a matter of if, it will eventually, but it's not necessarily something that's going to happen in the immediate future.
Okay, we will certainly watch that though. Thank you very much. Wise words from Bloomberg's Simon White then on those risks out there. And for more market analysis, check out Markets Live Go. MLIV Go, that's the function to use on your terminal. That's where you'll find the Markets Live blog. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
What's happening on Wall Street?
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. Over the weekend, the world's top finance chiefs failed to agree on a consensus statement because of an impasse over Russia's war in Ukraine. The host of the G20 meeting, India, issued a chair's summary as opposed to the traditional communique. Russia and China objected to the wording on the war. The language had been cleared by all participants in November. Off the coast of Italy, a wood boat filled with migrants broke apart after smashing into rocky reefs. At least 60 people died and dozens more are missing. Authorities say the boat had more than 200 passengers when it left from Turkey. And a U.S. government investigation reportedly has found that a laboratory leak in China most likely caused the COVID pandemic. According to the Wall Street Journal, a classified report on the Energy Department probe has been provided to the White House and key members of Congress. The Journal says the department made its conclusion with, quote, low confidence. Only a fifth of businesses in the UK plan to cut jobs this year, even though the vast majority expect a recession. That's according to a survey from the Boston Consulting Group. Meanwhile, more than half the business leaders surveyed say they will keep raising prices over the next 6 months. Anna?
Coming up on the program then, Matt, we'll talk to Karim Chedid, BlackRock Head of Investment Strategy for iShares EMEA. We've heard from Morgan Stanley overnight talking about how valuations and profit reports might be the things that weigh on stocks in the month of March. How does Karim look ahead to the month of March? What does he expect to see? He's been following the pickup in European equity exchange-traded products buying. Does that continue? We'll discuss. This is Bloomberg.
Every art institution I know of wants you to serve on their board, and you're very involved in the art world. What is it about art that attracts you?
Well, art is essential in a democracy, David. Art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live. And it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The UK and EU appear to be on the verge of a post-Brexit settlement around Northern Ireland. Rishi Sunak and Ursula von der Leyen meet today for final talks. In Nigeria, opposition parties want results from Saturday's election released immediately. The ruling party is dismissing concerns that the vote could be rigged. And Goldman Sachs hopes to turn the page on a forgettable year. This week, the firm's executives will lay out new reasons for investors to get behind the stock. I'm Anna Edwards in London with Matt Miller in New York. And Matt, markets then turning a corner, really, from that PCE shock that we got during Friday's session. All sectors in Europe in positive territory, and U.S. futures point higher.
Yeah, U.S. futures are pointing higher after the drop that we saw on Friday. The question is that a bit of a dead cat bounce, or is there really some conviction here? I ask the question because there are a lot of headwinds to S&P futures this morning. You've got a higher yield on the 10 years. Investors let go of that debt to some extent, 396, but we approach the big round number of 4 again, as it looked like we were backing away a little bit last week, I should say. It looked like we were backing away from the 4% level. Now we're getting closer, and that is, of course, a headwind for stocks. A stronger dollar is also a headwind for stocks. And you see the Bloomberg U.S. Dollar Index coming down just a little bit right now, but it's close to the highest level that we've seen all year. In fact, this is, I believe, the highest print since January 5th of 2023. So we're still 100 points off from the all-time high of, I think, 1353 last year. But we've seen a pretty decent climb this year, and it looks like that's continuing, albeit we have a red arrow, a very slight red arrow right now. NYMEX crude has turned down. We were up earlier in the session just about a half hour ago at 76.76. Now we're down at 76.22. So maybe we see continued concerns on the demand side or a little bit more supply than we had expected. In terms of what we see in Asia, thanks to one helpful viewer writing in, Anthony Santo Stefano, I know that a couple of stocks have gone ex-dividend in Australia. And that's the reason that you see Australia falling a little bit more than other indexes there, but also because of the iron ore drop, the drop in that price, we've seen the big miners in Australia hit harder. In terms of the movers, CGen is one of the big gainers in the pre-market, up 12%, as the Wall Street Journal reports that you could see Pfizer come in and buy this early stage cancer therapy developer. Pfizer shares are down on that report. BMO Capital Markets says that any deal would come with a decent premium, and that's the reason. And then Union Pacific right now gaining almost 6% in the pre-market after saying it's looking for a candidate to replace its CEO, Lance Fritz. The railway company expects to name a successor this year, according to a statement released yesterday. Anna?
Let's have a look at what's going on in European markets then, Matt. And generally, it's a positive picture. We oversold a little around the PCE number on Friday. U.S. markets rallied after that. Europe plays catch up a little bit with that. But also looking ahead at those U.S. futures pointing higher, perhaps we will sustain some positivity in the short term. So European stock 600 up by 1.1%, and all sectors in the early hours of trading in positive territory, being led intermittently by the chemical sector, up by 1.6%. Did we oversell around the BASF story? That was certainly dominant, and one of the other themes that led us lower during Friday's session here in Europe. Here's the German sovereign debt market. The 10-year yield we have in here, 2.5657%. This is the highest since 2011, or we've touched at least the highest level since 2011. So something of a watershed moment, if you like, when it comes to the 10-year. But broadly speaking, across the curve in Germany, we're seeing those yields going higher, and this just the European expression of that global story about just how high rates go, how high terminal rates go. And now traders are betting on a peak in rates in the Eurozone, not actually hitting until 2024. So that just tells you how fast that story is moving, and maybe raises interesting questions about whether this rally in stocks can be sustained. Here's the pound at 119.72, up 0.2% today. The focus very much on the Northern Ireland Protocol then, Matt, and whether we get some renegotiated deal there. What could the role for the ECJ be? Can the Prime Minister in the UK bring along members of his own party? All those perennial questions surrounding Brexit, but certainly a better mood music between the two across the channel as we wait for Rishi Sunak and Ursula von der Leyen to meet.
All right, we'll continue to pay attention to all of those threads. Right now, let's bring in Karim Chedid to bring them all together. He is BlackRock's head of investment strategy for iShares EMEA. And Karim, I guess the first question is, how much does your take on inflation matter? How much does the Fed matter right now? We saw the inflation data on Friday again bring the markets back down. And when you listen to Simon White, for instance, one of our strategists, he points out that if you look at the longer end of the curve, the bond market still hasn't priced in the kind of inflation longer term that we're seeing now.
Yeah, thanks, Matt. I mean, when we look at inflation data, I think this week will be important, especially bringing the conversation to Europe with the CPI release on Thursday, which is going to be really important as a signpost for some of that pressure, especially in the core. And when I come back to the PCE last Friday and the market narrative, if we take a step back, you know, January was all about Goldilocks. February has seen a transition in the market narrative towards, you know what, it's a bit too hot to ignore when it comes to inflation. And I think as we progress into March, into the Euro CPI on Thursday, that too hot to ignore will be something that will stay with markets.
Karim, good morning to you. And with that in mind, the European inflation picture, I noticed that and I've mentioned it a couple of times this morning, traders are now betting on a longer rate hiking cycle from the ECB. Possibly we won't see peak rates until 2024. Does it make sense for European stocks to rally in that context?
Not a whole lot, actually. Anna, like when we look at the Fed pricing, we've seen significant pricing out of rate cuts. We've seen a higher terminal rate, almost 5.4% as of this morning from markets. But let's not forget, we're seeing a similar dynamic for Europe. And so for the ECB, you know, a terminal rate could be as high as 3 3/4. And then importantly, when they get there, they're not going to immediately start cutting, at least in our view. And so with that backdrop, I think there are still some challenges ahead for European equities.
Yeah, especially as you were talking about European equity exchange traded products. We've seen a lot of buying of those since the start of the year because it was warmer. The energy crisis wasn't as bad as some had anticipated over this winter at least. And then China reopened. And there were lots of reasons to be cheerful.
Yep.
Interest rates going higher is good for European banks. And there were a lot of those. So Europe was popular.
Yep.
Will Europe now be less popular?
Yeah, I think so. I mean, the disinflation, and a lot of it was quite powerful and linked to, as you say, warmer winter, smaller energy shock than initially expected. Investors were really prepared for the worst, and the worst did not happen throughout the winter. And that trade did play out tactically, and we did see investors buying it. In fact, we saw more than $7 billion into European equity ETFs in February, building on the inflows in Jan. You know, year to date, it's been a pretty good year. And it's not only European investors buying their home markets. We also saw US investors step in and buy Europe. But that's going to come under pressure.
But you're still building conviction, it seems like, Karim, in consumer discretionary, European consumer discretionary companies, consumer discretionary ETFs. What product does iShares have there, and why do you think this rally has legs?
Yeah, thank you for that question. I think this is a key difference from 2022. So in 23, when we say we're cautious on equities, we still follow with an opportunity mindset, whereas in 22, it was more of a hunkering down mindset. So thinking about where there could be opportunities in European equities, consumer discretionary is one, as you said. There's the tailwind from the reopening of China there. There's the tailwind that this is a milder recession that we're expecting relative to previous recessions, and also the tailwind that the consumers are in better shape than in previous recessions. But then we look to other cyclical areas like banks, you know, a higher for longer rate environment from the ECB, which is our base case, is good for banks. And so we're starting to see this pickup also in sector ETF flows in those pockets, consumer discretionary and banks. And I think ETF investors are going to get more selective with this next leg for European equities than they were year to date, where it was all building block exposures at the start.
If we look at flows, Karim, investors have just been piling in to short duration treasuries. Do you expect that to continue?
Absolutely. I mean, with fixed income, we have seen some flows come under pressure with credit ETFs in February, coming off of a pretty strong January. So as we look to March, I do think the conviction will remain around short duration credit, but also short duration treasuries and European govies. That short duration trend is something that we're seeing really accelerate, especially as you start to get really good yield without taking much duration risk or go down the capital stack, frankly, in corporate bonds. So it's a no-brainer.
Okay, Karim, thanks very much. Nice place to leave the conversation. Karim Chedid of BlackRock, thanks very much for spending time with us. Coming up on the program, we'll be live from the Mobile World Congress. That takes place in Barcelona. We'll be speaking to NVIDIA's Senior Vice President for Telecoms. We'll be talking AI and how that is shaping the next frontier in connectivity. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Yes. Not keeping, look, people have conviction, or they invest if they invest for the right reasons, just keep at it.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Global giants of the telecoms industry are gathered in Barcelona for the World Mobile Congress. It's the world's largest and most influential event for the connectivity industry. Tom McKenzie is there now, and he joins us with NVIDIA's Senior Vice President for Telecoms. Tom?
Yes, Matt, good morning. Thank you. Joined, as I said, very pleased to say I'm joined by, as you said, the Senior Vice President for Telecoms at NVIDIA, Ronnie Vachista, and that importance around artificial intelligence, Oprah, and generative AI, the likes of ChatGPT, and how that layers onto the telecoms industry is really fascinating, Ronnie. It's great to get your time here. Let's kick off then with a question about the market opportunity. And NVIDIA's been riding high on the back of this news. What is the market opportunity? What is the value opportunity for NVIDIA in the years ahead from generative AI?
Yeah, so let me talk about AI in general and, you know, the connectivity between AI and telecoms. AI is just at the dawn of really getting used within the telecom arena. Telecom operators are looking at monetization opportunities from new types of applications, from new services that they can provide over the 5G network, having invested a large amount in the 5G network and the spectrum. And they're also looking at AI and how can AI reduce the costs, operational costs, which are mounting in this incredibly complex networks that they provide. So as NVIDIA, we provide both AI applications and AI applications for cost optimization, as well as accelerated compute, which enables a lot of that application to run in both the cloud and at the edge. So I would say just in terms of market opportunity, we're very much at the early days of use of AI within the telecom space.
So early days, AI telecoms, artificial intelligence telecoms. What is your expectation in terms of time frame as to when that leads to mass deployment of NVIDIA software and hardware for these businesses?
So that's a great question. It's really starting now. You know, I would say last year was kind of the founding of how some of these applications get used. And why do I say that? Let me give you a couple of examples, maybe. Today, Verizon is deploying a application from a company called AFI, which is a new company that is enabling autonomous retail or pop-up stores around sporting events, in supermarkets, where you walk in as a consumer, you show your credit card, you pick up what you want, you walk out the door. And there's no need for facial recognition, there's no biometric data, but it's 99% accurate. This is just one example. There's now examples of private enterprise where you have mines, for instance, with 5G connected cameras. And an operator now is able to monetize that capability for operating autonomous mines. So it's really starting to hit now, and I think it will be resonant over the next few years.
And NVIDIA's come out with a cloud proposition as well around this space, around artificial intelligence. And I know you've partnered with the likes of AWS, of Amazon, Microsoft, and others. Talk to us about how that is going to evolve. Other partnerships you're looking at? Are you looking at maybe investing in tying up more closely with some of these cloud service providers?
Yeah, so a lot of these workloads that we're talking about, AI workloads, run in the cloud. And the cloud for us is infrastructure that is the same at the cloud, or, you know, as people talk about the edge, it's the same infrastructure. Same application software can run across that spectrum of wherever it's hosted. But our partnerships with cloud is very, very important. We, as NVIDIA, we really want to work with all the cloud providers because that infrastructure that we provide will also reside in the cloud. And so the go-to-market, the ability for enterprises to engage with our software is either on-prem, or as many of them are moving to the cloud in a cloud business model, it will be NVIDIA infrastructure hosted in the cloud.
Hey, Ronnie, I'm wondering about, you know, AI obviously is a huge buzzword now, and cloud has been for a while, but NVIDIA kind of cut its teeth with graphics chips and then in-car connectivity. How are those two, you know, gaming and automotive telecoms, how are those two units or those two, you know, business lines doing for you?
Yeah, I mean, we just announced, and you'll see that those businesses have a natural cadence, and automotive is on the growth trajectory for sure. You know, the NVIDIA heritage of graphics and accelerating graphics processing really lends itself to things like digital twins, for instance, and our ability to create real-world digital twins, the visualization of which and the physics-accurate parts of which really enable industries to transform. At the same time, if you look at some of the intelligent video analytics that's getting deployed in real time today, again, a heritage of video that's been able to now deploy in a completely new way, which is the video analytics. So businesses now for NVIDIA is, you know, you may think of them as vertical like automotive or industrial or retail, but they're all driven on the same platforms. And those are the NVIDIA platforms that we've grown over years to enable.
What about the automotive side of things? You know, a lot of people struggle to understand why they need connectivity in automobiles, but increasingly it's impossible to to find them without these chips. You know, you've got your own hotspot, you've got your own phone number in the car, you've got obviously the GPS and everything. How does that growth look to you going forward?
So yeah, more and more electronics is making its way into the car. We announced recently the ability to play NVIDIA games in the car, stream directly to the car. We have ways of being able to optimize bandwidth. That business for us is looking, you know, positive, and I would say that as more and more electronics and more intelligence comes into the car, but also as the car becomes more of a device, a connected device, it very much lends itself to a lot of the NVIDIA strengths.
Ronnie, you may have picked up on the fact that Matt Miller has something of an obsession about autos and the combination between tech and autos. In terms of, I mean, autos and autonomous driving, that connects us to 5G and the 5G to 6G conversation. Some people are scratching their heads and saying, what, you're already talking about 6G, I don't have 5G operating properly. But there is that conversation happening here at Mobile World Congress. Talk to us about the importance of starting that conversation and what the potential market opportunity is for NVIDIA going within that direction as you move from 5G to 6G. What's the play there?
Yeah, so we started the 6G conversation a while ago. Now, whether it's called 6G, I'll leave that up to others, but the enablement of new applications, connectivity of billions of things, this has to happen on autonomous AI-driven networks. It can't be the traditional networks, the way of things. You're talking about automotive, connected cars, connected robots, connected factories. These are now reliant upon autonomy, the enablement of new applications that run over those, the data that's now being collected.
Is 5G not sufficient for that?
5G is a good stepping stone. 5G Advanced, which is another maybe release in the 3GPP standards, that gets us closer. 6G now becomes where I would say that you're really running autonomous networks with compute where you, accelerated compute where you need it, when you need it. But 5G Advanced, better latency, URLLC, the ability to have precision control, knowing where things are within a few centimeters. Those kinds of things are very much within the NVIDIA playbook as we look at autonomy and AI within the network.
Okay, really interesting. Ronnie Vachista, thank you very much indeed. Vice President for Telecom at NVIDIA on that conversation around the move from 5G to 6G and, of course, generative AI and the opportunities for NVIDIA, the chips, the hardware and the software. Matt.
Yeah, I have a feeling AI is going to be a hot word for every interview you do. T-Mac is at the Mobile World Congress in Barcelona. It's an awesome conference, and it goes on for days, so he's going to continue his coverage there. He's going to speak with more global executives this week. Tomorrow, Lockheed Martin CEO Jim Taiclet joins us on Surveillance Early Edition, as well as many, many others. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that
here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Let's have a look at some of the things that are on the agenda then, Matt, for this week. Today at 8:30 a.m., we're due to get US durable goods orders for the month of January. Tomorrow, we'll get another view of the inflation picture, this time in Europe, with data from France and from Spain. On Wednesday, China is set to report PMI, so we'll get an important look at the Chinese economy. On Thursday, we'll get the full euro area CPI picture. And on Friday, in the United States, the latest ISM services numbers will be out. And US President Joe Biden and German Chancellor Olaf Scholz meet at the White House. No doubt then, Matt, at the end of the week, there'll be a focus on the Inflation Reduction Act, how much support is being provided to US businesses, whether European businesses can get a slice of that. That, no doubt, will be part of that conversation. But earlier than that, the inflation picture out of Europe will be interesting, because that core inflation hasn't yet peaked in Europe, and now traders are betting that rates will keep rising into 2024.
Yeah, I mean, I think the subsidy story that Bloomberg had out overnight was pretty amazing, and also one of those stories where when you read it, you're like, oh, obviously the EU has been providing subsidies for years, and it's not like the US is gaining an advantage with the IRA, but really just playing catch up to a subsidies machine. So I think everyone should go on the Bloomberg terminal and read that story.
Yeah, certainly I got a similar message when I spoke to the UK Chancellor a few weeks ago, and I was asking about the UK's response to that US policy, and he was saying it was all about US catch-up in the green investment space. That is it for Early Edition. Surveillance is ahead. This is Bloomberg.
Chris, can I ask my landlord for a rent cut in the next couple months? Like, is that reasonable?
Well, I guess it depends when you signed your lease, Joe. It sounds like you got kind of one of those pandemic deals that, particularly in New York City, where rents actually fell really sharply in that first year of the pandemic. So we are really seeing the market having turned a corner a little bit over these past few months. Prices have been coming down for 4 straight months now in our national rent index. Wow. But, if you're still paying that late 2020 level, then you might not necessarily eligible for a discount at this point.
Good point. All right, I have another question, which is like, so I have 2 kids, but unlike other people, I actually am cool, and I don't want to move to the suburbs. Like,
This episode is just Joe taking like advice on handling his rent.
I just want to point out, I really like my landlord.
You love your landlord?
She's very attentive. We have a very good relationship. So even though I started the episode saying I was anxious, if she is listening to this, I hope she hears that I really enjoy where we live, and I really enjoy our the landlord.
She should factor your consistency into her pricing algorithm.
We've never been. Yes, exactly.
Excellent.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close.
Welcome to Bloomberg Crypto.
Destination is clear. Ultimately, the Fed wants to orchestrate demand destruction.
There is a very strong signal coming from those leading indicators. That's too hard to ignore.
U.S. equities stand perhaps in a little bit of a tougher spot.
A lot of our clients are just kind of waiting it out. They didn't buy the January rally. They're still licking their wounds from last year.
Markets look expensive. Earnings expectations look high. So you have this whole bearish narrative. I call it the bearish truck, and it's coming.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
You want to take a dig at Chelsea? You want to sing the praise to Spurs?
No, it's fun this weekend.
Take your choice.
You know, it was okay. You know, when we get to Bahrain, you know, I'll have to calm down. But you know, I'm looking forward to Formula One coming up, and you know, and the bond market entertains while we wait.
Let's pick up on a bond market.
Bond
Live
market's
from a New big York
deal
City
this
this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene. I'm Jonathan Farrow. Bramo should be back tomorrow, we hope. Equity futures positive about 0.4%. But TK, we've got to kick things off with this bond market. Your 2-year yield right now, 4.83. The intraday low of the year came earlier this month, at the beginning of this month, at 4.03%. We're talking about an 80 basis point move in just under a month.
For your 401k in the equity market that ignores bonds, we are now at the ginormous stage. We did that last week. I look at where we are. It sets us up for a march of history. There was the headline, John, of the German 10-year yield, I believe it was, back to 2011. I'm looking at what the pros look at, which is the vanilla spread. It is now at record-wide inversion on a daily chart.
We've got to deal with the silence this week, the silence of waiting for payrolls, waiting for more information, waiting for another CPI print. Worst week of the year last week, Tom, on the equity market. 3 weeks of losses on the S&P 500. And the year-to-date gain that we celebrated maybe several weeks ago, Tom, we've cut that in half.
Yeah, we have. And I mean, you're right. It's a no man's land of data. You have to pick up on every tea lead as you can. To me, it's trends and vectors, to borrow from physics. Vectors, and the key thing, John, is do they continue into March? In the bond market, which I think is the deepest thing we can look at right now with the dollar with a little bit of strength, the 10-year yield, I mean, to 4% and all, what does that signal to the housing vector, the jobs vector, the GDP vector? Forget about the Ides of March. I'm looking at the trends of March.
10-year, 395 this morning. Let's whip through the price action for you. Just briefly to kick things off this Monday morning. Equity futures are elevated by 0.4%. 3 weeks of losses on the S&P 500. Longest weekly losing streak of the year so far after the biggest weekly loss of 2023 so far. In the bond market at 395.51 on a 10-year. That's the 10-year piece. Talk about the 2-year. Up a couple of basis points on a 2-year to 4.83. Just remarkable stuff. In the FX market, euro dollar 105.69. It peaked a day before the payrolls report at 110.33. And Tom, here we are back to 105 on euro dollar.
Citigroup talking about a little bit of a slowdown in some of these trends, and one of them is China opening. And I'm watching Chinese renminbi off the radar. If it gets out to a 7 level, you know, that's like Dow 10,000. It's like a big deal. 7 yuan per dollar. We're not there yet, 6.95. But the bottom line is, what's the EM dynamic here as well? Something else to look at.
The US dynamic, the equity market story, Tom. Year to date, at one point, the S&P was up 9%. The Nasdaq was up 17%.
We're giving it back, basically.
I think both peaked the day before payrolls came out.
Yeah.
And between that payrolls report and the start of the year, there was this nice little story that started to form, driven, I think, exacerbated, encouraged by Chairman Powell, who said the disinflationary process had started, and then bang. The payrolls report came out for the month of January, and everything changed really quickly. No longer about the Fed backing away, more about the Fed sticking with it.
And somebody had it in the zeitgeist. I'm sorry, I don't remember where I saw it this weekend, but it's true in that all of these markets are simply lodestone to the Fed. I mean, it's a foundational linkage and anchoring, if you will, to Fed dialogue, Fed debate, and Fed action, and that comes off the data. We're waiting for the data.
12 months ago, the Fed was at 0, and the Fed was still doing QE. That was just 12 months ago.
Yeah,
we were talking about maybe the Fed peaking at 2%, and here we are talking up 550.
Our next
maybe
guest,
more.
Our next guest says, watch the Fed, and he's optimistic. The Fed will get it done. He's optimistic about the markets.
John joins us now. John Stolfus, Chief Investment Strategist at Oppenheimer Asset Management. John, last year was a difficult year. I know that. We talked about it a million times last year with you. It was a better start to 2023, and then, John, things started to go wrong. It seems to me that getting the call in the bond market is vital to make the call in the equity market, and this bond market is a challenge right now. Stuart Kaiser of Citi wrote this. He said there's no consensus on the current regime. He said there is, however, a tendency to read all moves in rates negatively. Higher rates mean growing inflation risk. Lower rates point to a hard landing and hard landing outcomes. John, how do you grapple with what's happening with this bond market and what it ultimately means for equities?
Well, we'd say, John, that when we look at this, it really looks like the Fed's doing the right thing, and that counts the most. It's the end of free money. It's a rough hit for the high leverage players. It's going to cost them a lot more money. It's already costing them a lot more money to place their bets. But the efforts of the Federal Reserve, even with mistakes, ultimately over the last 40 years that I can remember in these markets, the Fed wins. It gets it right, and we get back on track. So we'd have to look at it. We think it's a great opportunity for investors even to diversify further. Laddered portfolios and fixed income could look good. Short duration stuff for people who don't want to dedicate themselves, don't feel comfortable with a ladder at this point. But for private investors who are intermediate to longer term focused, opportunity. And of course, for traders, gosh, with this kind of uncertainty on the landscape, there's opportunity to have lots of fun on a day-to-day basis. But as intermediate to longer term investors, we can't help but think this is the time you want to look for those babies that get tossed out with the bathwater in the downdrafts. And this pause that we've had, in the upside of the market may be a pause that refreshes when we look at it a few months down the road.
John, your core theory is the Fed gets it done. If they get it done, that means successful disinflation. What's the history you observe in your optimism? What is it, John? S&P 4,400 S&P?
Year-end target,
Have you done the Dow extrapolation of that?
I
Have you interpolated the Dow?
Maybe do that later.
Do that during the question here. John, I look at where we are in your optimism. So if we get a Powell-friendly disinflation, what does GDP do? What does growth do? How does that fold into the stock market?
I think what we may very well see is a GDP at a moderate pace, inflation slowing as not only the supply chain but also the stickiness of inflation that's caused by just retailers would be hesitant to give things away too cheaply as competition returns across a number of the sectors. Right now, competition is slow to come back. And that will be disinflationary. China reopening has an inflation related to commodities, perhaps, but overall it would bring back competition around the world. With the diversification of the global supply chain that's occurred, that will likely heighten competition as we go forward. So we think disinflation is not a concept that is dead. It may be around the corner, if perhaps not on the current landscape.
Which sectors will benefit here? Let's start with banking. I mean, banking is so important, and you've got a massively historically inverted yield curve, 88 basis points, 2-cent spread. How did JP Morgan and company do?
Well, when we look at J.P. Morgan, for instance, we think coming out of this, we don't feel as bearish as Jamie Dimon was concerned. Although, you know, listen, we have full respect for the man and how he serves his firm and shareholders, and we are owners of shares of that in the portfolio that I manage. But to say we think the big banks are going to benefit from this. They'll benefit in the process of not only loan making at the commercial loan level, they'll also benefit from trading. There's a lot of things going to happen for the banks, industrials, technology, and consumer discretionary. And if you look at the rally since October 12th, these sectors have done remarkably well, with the exception of consumer discretionary, as I recall.
Hey, John.
I think has just been beaten up too much.
So many people are struggling with this market this year, John. Still trying to work it all out. John Stolfus there of Oppenheimer Asset Management. John, thank you, sir. Mohammed El-Arian in the Financial Times this morning, Tom. It is time for the US to upgrade its fight against inflation. Congress should hold the Fed more accountable while helping it to conquer rising prices. The latest from Mohammed just
Are we
moments ago,
resetting 6%?
on the FT.
There's a real story here on Monday with what I'm seeing in the bond market at 396 and the 10-year yield. John, are we getting comfortable with the dreaded 6% level?
Well, think about how quickly things have changed, Tom. And I'll answer that question. We've gone from saying that there is a gap between the Fed and the market, the Fed up here and the market down here. That's switched. Now you've got the projection of the Fed at about 5.1%. And as of last week, the market's come up to about 540 on a peak rate in this hiking cycle. So is 6 part of the conversation? Sure, it is. Whether we get there, I have no idea. Ultimately, that's going to come down to the economic data and whether it continues to be as robust as it has been at the start of this year. And Tom, when you go through some of the research right now, ask people where they think we'll be in June. Some people think this can continue. Others just think we hit an air pocket in Q2, Q3.
What's interesting to me is it's not a barbell. It's not a polarity of opinions. It's like 7 opinions. You know, there's not like it's this or that. There's a confusion out there that leads to 6 or 7 what ifs. The one I'm looking at, I'm not predicting it. That's not what John and I do. But what I'm looking at is the one least talked about, least probable. Mortgages move out to new highs. The Bloomberg Total Return Index breaks down. It has not yet. The price breaks down and goes through the lows of October. Some of these yields we quote every day. I mean, John, what does German Italian do? I mean, things like that. Some of these secondary tea leaves, no one's modeling out where they go. And I tell you, it's comfortable today to have Alberto Gallo joining us.
He's going to join us shortly, Tom, in the next hour. I'm looking forward to that. I think the thing has changed, Tom, is that coming into this hiking cycle, we were focused overwhelmingly about the amount of debt and not the structure of that debt. So we're all sitting here thinking they can only take rates so far because there's so much debt out there on sovereign balance sheets, not corporate and household balance sheets, which are infinitely stronger after the fiscal transfers of the pandemic. Wow. And now all of a sudden we're focused on the nature of the debt. Take mortgages. How many notes have you seen about the mortgage market now compared to the mortgage market back in 2008 and the proportion of variable interest mortgages in the United States and how much that's come down?
Yeah, I'd agree. We're not there where it's really carefully scrutinized because we haven't gone through those levels. But today with durable goods, pending home sales, that's the kind of micro data that can enforce this trend that we see. 89 basis points, 2-10 spread. That's the key number for me.
Tom mentioned Alberto Gallo, the CIO and co-founder of Andromeda Capital Management, is going to join us very shortly here in New York in the next hour. Looking forward to that. Futures up 18 points, advancing 0.5% from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. British Prime Minister Rishi Sunak and EC President Ursula von der Leyen meet today. It's a signal that the two sides are ready to settle their differences over Northern Ireland. Finalizing the region's post-Brexit trading arrangements has been an issue since the withdrawal agreement was reached in 2019. Saudi Arabia has signed agreements worth $400 million with Ukraine. The kingdom's foreign minister made a surprise visit to Kyiv and met with President Volodymyr Zelensky. Last week, Saudi Arabia voted for a United Nations resolution calling for Russia to pull its troops out of Ukraine. A U.S. government investigation reportedly has found that a laboratory leak in China most likely caused the COVID pandemic. According to the Wall Street Journal, a classified report on the Energy Department probe has been provided to the White House and key members of Congress. The Journal says the department made its conclusion with, quote, low confidence.
Off the coast of Italy, a wood boat filled with migrants broke apart after smashing into rocky reefs. At least 60 people died and dozens more are missing. Authorities say the boat had more than 200 passengers when it left from Turkey. And a fresh wave of layoffs at Twitter to trim costs. The nationwide cutbacks included teams from engineering and product. Sources tell Bloomberg some employees learned that they were laid off via an email late Saturday, while others found out when they couldn't log into the internal system. It's unclear how many workers were impacted. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power. This is Bloomberg. The top names at the Fed are on Bloomberg.
Inflation's normalizing, but it's coming down slowly. I just think there's going to be a lot more inertia, a lot more persistence to inflation than maybe we'd all want. I'm hearing people still out there pushing price and trying to test where the levels of inelasticity really are. As the meetings go on this year, we'll see what happens. If inflation settles, maybe we don't go quite as far. But if inflation persists, maybe we'll have to do more.
Nobody covers the Fed like Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
We have at this point not seen them take the step of providing weapons to Russia for purposes of the war in Ukraine. We are watching closely. We know they haven't taken it off the table, and we are sending a clear message, as are our European allies, that this would be a real mistake because those weapons would be used to bombard cities and kill civilians, and China should want no part of that.
Jake Sullivan there, the White House National Security Advisor, speaking on ABC over the weekend, who believes China is tying itself in knots over this issue between Russia and Ukraine. Wall Street Journal reporting over the weekend, and this story got a ton of attention. I'll share some of it with you if you haven't seen it already. So the U.S. Energy Department has concluded that the COVID pandemic most likely arose from a lab leak, according to a classified intelligence report recently provided to the White House and key members of Congress. So that's the first paragraph of the Journal's story. The third paragraph, Tom, I think is equally as revealing. The new report highlights how different parts of the intelligence community have arrived at disparate judgments about the pandemic's origin. Now, when you go through this is fascinating. The Energy Department now joins the Federal Bureau of Investigation, the FBI, in saying the virus likely spread via a mishap at a Chinese lab. 4 other agencies, along with a national intelligence panel, still judge that it was likely the result of a natural transmission. 2 agencies, Tom, undecided on the issue.
Which means only Anne-Marie Horton can decide the issue.
She gets the final vote?
She gets the final vote as well. For those of you internationally, this riveted the zeitgeist this weekend. This story from Michael Gordon and Warren Strobel was really something. Anne-Marie Horton joins us now, our Bloomberg Zeitgeist correspondent this morning. Anne-Marie, just real simple here. What's the so what? That was 3 or 4 years ago. I get that we should, look at it and that. John lays out beautifully the argument about it. But what's the so what now or the so what 2 years from now?
Well, I think the bottom line is that the U.S. government, members of Congress, the American people want to know the origins of this virus. And also, I imagine many members of Congress want to hold China more accountable for this and potentially use it to shore up allies as they try to combat China on the international stage on a number of fronts. Jake Sullivan was also asked about this on a number of Sunday shows over the weekend. And to John's point, what is fascinating is that you have all of these agencies unable to come to a final conclusion. But to Jake Sullivan's point, what he said is that it was President Biden who wanted to bring the national labs into that conversation, and the Department of Energy controls those labs.
Anne-Marie, my study of this is simple. In the movies, Matt Damon doesn't work for the Department of Energy. What do the intelligence people say about this?
Well, they're mixed. To the Wall Street Journal report, 4 other agencies, along with national intelligence panels, still judge that it was likely a result of a natural transmission. So the FBI and the Energy Department are on one end, but then there's the national intelligence of 4 other agencies on the other end. I don't have an answer for you.
How will the Chinese respond to this? Do you have any inkling at all? Is this just a further affront to China where they do what they do?
Well, China will just respond as they have been, which is that this was not a leak on purpose, or this didn't even come from a lab. That is how China is going to continue to respond, I imagine. And when you're hearing from lawmakers that are being asked over the weekend about this, the senator from Alaska was pretty blunt. He said that China will lie to the international community.
Anne-Marie, Jake Sullivan not only addressed that story, but also the potential to provide lethal aid from China to Russia. Anne-Marie, what did we learn about that over the weekend?
So what we learned from Jake Sullivan and also the president, who was talking to reporters before he left the White House, was that they do not see China acting on that right now. But what they do see is that, and Jake Sullivan said there in that clip to ABC News, is that it's still on the table. I mean, the conversation in Europe last week was really about that Der Spiegel report about potentially this contract for 100 kamikaze drones from Beijing, from a Chinese company, going to Moscow. So this remains still a huge concern for the administration, and they clearly are outlining to the international community that there will be consequences. But the big question is, what will actually those penalties be if China was to cross this line?
Well, I think that's the number one question, Anne-Marie. It's really easy to come out and say there's going to be consequences. What are the consequences? Have they been clear about that at all?
No, they haven't been clear about this, and Jake Sullivan says he will not do microphone diplomacy, and he thinks it's best to talk about these consequences and penalties through diplomatic channels. What you do see the administration doing is also trying to shore up European allies to reach out to top-level officials in China and their counterparts, and also say this would have serious concerns in dealing with not just the United States, but also in Europe if you go across this line. It's an awkward moment for China, especially as they're about to have a huge grand welcome for Alexander Lukashenko, a staunch Putin ally, this week.
AMH, they say they won't do what you call microphone diplomacy. So why are they being so transparent with their intelligence?
Maybe this is one reason, or the administration sees this as a way to potentially warn China. They're being very much so out front that they have this information, and maybe they are just putting them on guard. Or the other thing is they potentially don't know to the full extent of what the consequences would be. It depends potentially on what the material is that these Chinese companies may end up providing.
Emery, quick segue here, just to sneak this in, because we want to talk about President Biden in the next hour. Right now, the governor of Florida, did he have a good weekend?
He had a great weekend. He was in Mar-a-Lago, and he was encroaching on the former president's turf with a lot of people at this retreat he threw. And it does look like he is picking up steam, that's for sure.
I mean, I'm looking at this, Anne-Marie, and all the spy and intrigue and that, and I'm sorry, it's like The Good Shepherd. I can just see Bob De Niro, Angelina Jolie, and John Farrow in the sequel to that. I mean, you know, I just think De Niro, Jolie, and Farrow, it just got a ring to it, you know? It's just got a certain sense to it.
That works.
I want to go to the premiere.
You want to get into the movie business now?
No, I don't want to get in the movie business, but I just think,
you'd be good at that.
You totally work like founding of the CIA and all that.
Sure, yeah.
Damon did.
Tom, just working through this journal story, the Energy Department made its judgment with low confidence, according to people who have read the classified report. The FBI previously came to the conclusion that the pandemic was likely the result of a lab leak in 21 with, quote, moderate confidence. Which one is it?
I don't know. I just, to me, there's two issues here. One, it's very valid work, and I'm sure there's a lot of people putting a lot of effort and risk into this. But it's also the timeline. We're 3 years on. We still don't have an answer, right? I mean, as a general statement.
Yeah, and I think people, for good reason, want to know how this started, Tom.
Absolutely.
It's devastated livelihoods around the world. Are we going to find out conclusively? 3 years later, I think it's going to be very difficult to work it out conclusively.
From a medical standpoint, I think it's got some huge validity in that if there's any virology or microbiology that was learned from it, that's priceless. That's something we've got to go after.
Do you remember when this was a conspiracy theory for the best part of 5 minutes? And then all of a sudden it's something that we're openly discussing.
It's no different than what we're doing in the bond market here. It's a lot of navel-gazing about, like you say, we're moderately confident. It's like the Fed minutes.
Were they moderately confident?
Some people think Wuhan.
I don't think
several people.
I don't think they're confident at all over on the FOMC. Anne-Marie down in Washington.
It's a great story.
Down in DC. Yeah. Thank you. Got my attention, got yours, got everybody's. Let's talk about the confidence, the degree of confidence this Fed has. I imagine, Tom, for Chairman Powell, I think his confidence has taken a real bruising over the last month. Just the arc of his communication, TK. Think about the Brookings interview. Think about the disinflation process has started. Then all of a sudden, bang, the data hits you.
You're waking up on a Monday. What do you need to know? The single tell is a 2's inversion is out to a new low level, buttressed up against a negative 90 basis points. Shout out Priya Misra, Ira Jersey, and others that aggressively called for this unthinkable inversion. What's far more important is other series, John, are tending towards new price weakness yield up. Maybe we're not there yet. Maybe we'll get there with the data this morning.
Even Mike Wilson of Morgan Stanley acknowledging the equity market may have one last stand before we fully price in the earnings downside. He said it depends on two things. We think interest rates and the US dollar both need to fall for this last stand to have a chance. Do you think rates and the dollar are going to fall anytime soon based on the incoming information so far? That US data needs to turn.
Yes, and the housing data coming out, Case-Shiller, which is dated, fine, but the micro data has some real value, and we'll do that here. What's the time? I think we got McKee's teed up for 8:30. Durable goods, pending home sales. John, I know you're glued to the Dallas Fed manufacturing activity.
I'm glued to this. When was the last time we could say this? Francis Donald of Manulife, up next.
Wonderful.
governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother,